Good day, everyone. Okay, let me get this link shared, and then we will get going. Let me see, where would I pull this link? Here we go. Hope you all are doing well today. I have a few places to share this. And I'll share it in Discord. That's a typo. And finally, I'll share it on Twitter. Oh, I just remembered. I said I would DM Crypto Poseidon when I go live. All right. So, good morning, everyone, or good afternoon. Gerard's saying, look behind you. He is my resident stalker over in the Discord. There's a few things I'm looking at, just that I probably won't be charting all day, that are kind of near critical level, so I might pop over to those. But I am going to essentially clear my chart, and then we'll start this analysis. So we're going to look at Bitcoin, Ethereum, and an altcoin. I do think, hold on a second. I do think it's between Matic and Sol. I took some votes. We can kind of look at both and see which would be more interesting. So maybe I'll pull, maybe I'll close XRP. This XRP short has sure been going well from up here. Of everything, it hasn't really relief rallied at all. Let me go to check Matic first. I know my ABCs. Where are you, Matic? LMNO. This is some old analysis that clearly, probably from down here, we clearly did not reject from this idea. Okay, so let's go to, I'm just curious if this is at the 786. I just want to clean this up a little bit. The best thing to do when you're charting on a low time frame is first to make sure you're aware of all your high time frame levels, because that is going to supersede anything on a low time frame. So I'm going to kind of go through the process of what I would be looking for. And so that is to first be aware of all your high time frame levels, medium time frame levels, then go down into the low time frame, but also try to figure out what makes the most sense in terms of what is price likely to be doing. Is it likely to be trending even on a low time frame, ranging? Is it consolidating and reversing, or putting in a top, putting in a bottom? So creating some context is important. Just want to see a few things here. This looks very toppy. I'm just marking out a few levels here and just kind of, when I'm pausing, I'm just kind of looking at the chart and seeing if I just see anything, eyeballing it. That looks kind of nice already. So we have this, if we sweep these lows, we have the 618 from this pivot low and the 382 from this pivot low on the 1 hour. That's some fib confluence. So it's going to be a level of interest. We are at the point of control over this range since this impulse on the 1 hour chart. That's going to be important resistance. I'll mark out just our local fib resistance as well. That should be good. Just for some levels around us here. We can go to a lower time frame now. So once I have some analysis done and we're kind of synced in to Bitcoin and Ethereum, and let's go with Matic for now. And we'll just kind of keep an eye on things. Let's see how price interacts. I'm going to remove this. I don't like this volume profile line, but we have the POC marked out. This is important resistance on a medium time frame. We do have the 382 fib. I'm going to extend it so we can see. This is probably a local 786 retracement. Okay. I'm going to put the 0 on the 1 on. So this is, I mean, technically, I'm not saying I'm going to open a short right now, but technically this is shortable. So I had to just pop over and check something. Technically this is tradable because you have your point of control, major resistance. You have your local 786. You probably just trade it something like this, really. You have your 382 as well. You could wait to lose the 382. Wait for another retracement. But I'm not trading it. I'm just pointing out that there's clear resistance here. That point of control is important. But I mean, typically, you know, you even have this really, I think, simple idea of your back testing. So you were consolidating support, support, support. You lose it, and you're back testing these old lows as resistance. And then you have the confluence of the point of control and that local 786. This ascending channel isn't really anything. I just was drawing a random thing and seeing if anything was there. I don't think there is. There's probably something shallower here. I don't think there's anything clear on a low time frame. There's certainly nothing descending. There probably was a descending parallel channel. You can kind of eyeball it and see it, but you can see, I mean, these would have offered nice, this would have offered a nice idea for a long, but there's nothing really here anymore. Even this would have given you a nice short on a low time frame. Looking at this, it's a parallel channel. I'm just pointing this out. This isn't really useful anymore, nor is that. Okay, so I think we have some local ideas here on Matic. I will actually put on the most local fibs as well, just to be aware of them. So for fibs, support or resistance is always pulled left to right, high to low. You can pull it on a really low time frame. So a really low time frame would be the most recent high to the most recent low. That gives you a 786. So you can see, that's what I want to point out really quickly about the fractal nature of price action. This is a 78.6 retracement of this measurement of price. You can see price has come down, retraced, and rejected from that. I'm not saying it's going to be the top necessarily, but that's what it's done. But if we go to a high time frame, we pull from this pivot high, you can just see this is obviously an important impulse, and then the top before we dumped into this new low. So if you pull from there to this low, we also have come up to a 78.6 retracement. And that's what fractal means, that price action behaves the same way on every time frame, which is one of the reasons I'm doing this live stream, is to show that price actually moves quite similarly on a 1 minute time frame as it does on high time frames. So you can actually practice a lot of analytical ideas on a 1 minute chart, and you get a good idea for how price moves, and you can just kind of get more time in quicker. I wouldn't necessarily recommend trading on a super low time frame all the time, but it's useful. All right, so let's just hop over to Bitcoin, and we'll look at how it's behaving. So there's a couple ideas on Bitcoin. This is certainly misadjusted. I'm going to clear off a lot of things here, and we can look at it later. I might just close some stuff in folders as well. I do want to keep these trend lines on. There's no point in repulling them. So we can be aware of some major fibs below us. This 382 is completely washed out. No point in having that on. And we can pull from this low to this high, just to be aware. We do have this ascending channel idea that is important. All right. There's a big level of interest above, which for Bitcoin is always this golden pocket retracement. The only thing I don't like about it necessarily for potential short is if you want a sniper entry, we have this wick high that almost seems reasonable to take because there's going to be liquidity above it. So the 786 would probably make a little bit more sense as a potential short, sweeping this high with an entry trigger after you move below it. Obviously, we don't have to go straight there. I'm just showing the level of interest. But I'd be surprised if we don't get some kind of nice setup on something over the next little bit. Let's look at some. I know this is a local fib here. So you can see price from this pivot high, we've moved up into this golden pocket, which is interesting. We've also potentially swept the liquidity above these highs. I was talking about this a little bit in the Discord. Most of the members would be aware of something like this. It's pretty simple. That there's going to be liquidity above these highs because as people build short positions, they're putting their stop losses above here. And as people are interested in longing breakouts, which I typically don't do, they're waiting for these highs to be taken. All this volume comes in and we reject from the golden pocket. It's probably also shortable. I actually need to set an alarm here on VET. I shorted VET last night here, and I actually did just take a quick profit one because I had to wake up at 3 in the morning for an alert. I just set my stop to entry, and so I just had a really marginal win here. There's a high time frame level here on VET. High time frame idea. but that's quickly potentially getting washed out. So if we close back below, come back below this level, then I might open a short. But I'm not just going to short into this pump. I'm waiting for some weakness. But anyways, let's go over to Bitcoin. I mean, this is probably shortable even now, and or tradable rather. And I'm not nothing is financial advice. I'm just explaining to you how I would approach these levels. This is very similar to what you what we looked at Matic, where you have a key fib retracement. You have a really simple idea of just retesting this consolidation, the point of control. Same with Bitcoin. You've swept these highs, so that's really nice. Your prices move back below them, so you have a swing failure. And you can even trade something like this locally, where your stop is just above that wick. And that's a technical way to trade a swing failure, maybe targeting into these lows, which I'll talk about shortly. But yeah, I mean, I think just this isn't super low time frame analysis. It's relatively low time frame. But I do think this is reasonable. The other thing that makes this reasonable is we have slight bearish absorption on cumulative volume delta, which actually, give me a second and I can show that on the stream. It's not on TradingView. This would probably be the most important piece of confluence typically. I think slight actually, it's probably more than slight. Let's go over to here. All right, so this is just open interest down below, cumulative volume delta, and you can look for divergences. So basically what this tells you is when aggressive market participants are engaging in activities like market buying or shorts getting market stopped, it doesn't tell you limit orders, but what divergences do is it might tell you that when price is failing to make a higher high and CBD is making a higher high, and we have divergences, bearish absorption, bearish divergences on 2 time frames here, from 2 pivot highs. This means that it tells you that there's big traders sitting here with limit orders, limit shorts, filling those short positions on these rallies, absorbing all this aggressive buying pressure. And, you know, some of it shorts getting stopped out. A lot of this is all just longs opening. So when you have longs starting to open into resistance, bearish absorption, a key level, I would say it's tradable. I mean, that just puts all the odds in your favor. You know there's big traders here absorbing buying pressure. Typically they do that because they intend to hold price down and push price down. But it's not 100%. It's just a confluence for, you know, a trade idea. So anyways, I think it's perfectly reasonable to open a low risk short in a situation like this. But you have to always use risk management because there's no way to guarantee price will do anything, and price could easily just come up and squeeze through this level into one of these higher time frame levels, and the bearish absorption could get just more dramatic. That happens too sometimes. Probably the ideal scenario here, what I would always prefer. This is actually right when I went to bed. I ended up waking up at 3 in the morning or something, and stayed up till 5 in the morning, then went back to sleep. But I would have liked to probably have traded the first touch, because you're actually most likely to get a reaction on the first touch of a key level than probably the second or third touch. Second isn't bad, retracements, but yeah, I'm just pointing out there's bearish absorption here, key level, potentially swing filtering these highs. I do have some my high time frame bias or medium time frame is that we do take these highs on Bitcoin, but it doesn't have to be immediately. price could come back down into, say, these lows. There'd be some nice confluence here with this ascending trend line, a golden pocket. Our 382 from the absolute low is quite near. Let me get rid of this one. I don't think nobody cares about that one. Yeah, and I think there's actually just one more thing that's maybe interesting there. I want to pull a couple of these. Excuse me. That looks so nice. You have the point of control right on the 618. That's pulled from this the low we made, but you should be aware of a few different volume profile pulls here, like pulling across this entire range, pulling from the low, pulling from this impulse low. You can actually even pull from some of these highs is relevant as well. Just looking for confluence. But anyways, for some reason I thought we had a local point of control around here, but I guess we don't, and I guess that makes sense. This is important though, where, you know, this is over this price action where the most volume has been transacted, so an important level below. All right, let's look at ETH as well, and we will come back to Bitcoin. So this is going to change a lot of things depending on what happens here. You know, we're likely to spend the rest of the afternoon grinding down, or we'll put in something like this. This isn't really somewhere, I mean, this is the top of a local range, right? So the only ideas here for a trade for me would be no trade, waiting for higher, or potentially just waiting for more weakness, or a short. This is never somewhere I would long, because this is resistance. You find your longs from the lows, and you had plenty of opportunity. So anyways, locally, this is the top of a range. But of course, there is higher time frame ideas. So it's just up to you, you know, if you're interested in scalping or not. But understanding that anything opened here is probably a scalp. It's probably not going to hold as a major high, and you'd just be scalping this local range, which we'll just put this on as a range here. I'm actually going to change the colors back to white, and then we'll go look at Ethereum, and we'll come back to this. Let me get rid of this little red box and get rid of this fib, because it's just messy. But yeah, just locally, this is kind of nice price action even for a short. So you have the bearish absorption, you have the wick up into the 618 from here. I want to actually show you guys something really quick. If you've been watching this chart, you probably remember this happening: straight up, straight down, straight up, back down. But you know, these are actually technical levels. So we came up into the 618 from the last pivot high, and when we retrace back down after washing out a little bit, just back down into the golden pocket. So up into the 61.8% retracement, down into the 61.8% retracement. That's why I'm looking at these fibs, right? Even on low time frames, you can be aware of them from all your top major pivots, but also the minor pivots are useful as well. You wouldn't necessarily trade them alone, but you might want to look for some confluence. Anyways, let's go over to ETH. I keep saying we're going to do that. Somebody was asking about the membership or the link to the Discord, or yeah, there is a Discord group. The focus is primarily education. I do kind of like live analysis pretty much every day. It's not always on a live stream. Usually, sometimes I'll do videos, but typically it's just updates. I update charts, talk about some of the things I'm talking about now, and then if whether or not I'm gonna take a trade and why, and I just kind of break down price action every day the way I see it, which is interesting to some. The website is luckyapestradingfloor.com. The website is in my, or the link is in my Twitter bio. I'm just going to just looking at the chart for a second. Sometimes before I start charting, I just like to look at things, even things like potential Elliott wave ideas. I know there's some ideas above us for ETH. My perspective is that it's more likely, 1, 2, 3, 7. It's more likely that we push higher on Bitcoin and ETH. I think it would wreck a lot of people. It's just looking for some timing ideas that might make sense for that. If you watch my parallel channel live stream, one thing I like to do is I like to create parallel channels where I have, in this case, the lows as my trend angle, the high as my anchor. And in this case, the highs as my trend angle, the low as my anchor. And you'd be surprised how often you get literal perfect touches and rejections when you pull channels that way. But they're sort of hypothetical channels. This one looks nice because this is a hypothetical channel because it hasn't technically formed, but you see this nice middle line interaction, which is typically a good sign that it's valid. And we're at the golden pocket, major golden pocket resistance now, the 618. You can see we were holding it. I'm actually going to clear this off because this is just also an important way to look at how price interacts with key levels. So we'll be aware of this. So price came up and rejected from this. I did short this. We had, I think, a 4 or 5% rejection, if I remember. Yeah, 4.6% rejection. Now, then we pushed up and we claimed it, right? So now this was resistance. Now it's support. So we're bouncing off of it, bouncing off of it, bouncing off of it, bouncing, and then we lose it. And now we're back testing it as resistance. Resistance, resistance. So what was previously resistance, if you claim it, should now be support. When you lose it, it should now be resistance again. And it's on a level you've got to watch. And that's where you see just these support resistance flips. Really, sometimes you can be aware of what the actual technical level is there, but sometimes it doesn't really matter. You can just see it in the price action, right? Clearly resistance. Here, clearly support, clearly resistance. And now you have the middle of this ascending channel idea. If we reject down here, for me, it's very sensible to be watching this level because you have a potential ascending channel idea into a key fib. And if they overlap, that's a lot of nice confluence. But we'll just keep an eye on things here. We can do some local analysis. We should be aware of what fib retracements are here locally. Because this golden pocket that we're looking at is a very high time frame one. Let's go to the 4-hour chart. It's pulled all the way from this pivot high to this pivot low. So it's, you can see we're interacting with the level, but yeah, it's a very high time frame. Not very, but relatively high time frame level. This is also the 0.5 fib. So it's a 50% retracement from here to here. I don't really use the 50% on Bitcoin, but it's more relevant on Ethereum. So as you can imagine, the altcoin market moves with Bitcoin. Typically, you'll find that when Ethereum or other alts are coming to resistance, that Bitcoin is as well. And so that can be some added confluence. You know, we have this really interesting idea here on Ethereum or Bitcoin. On Ethereum, both at key resistance. I did short Ape here earlier this morning. It is also there's a key idea here. So we have this local. I didn't quite pull this perfectly. We have this local ascending trend idea. We have a high time frame golden pocket right around here. And then we swept this high. So grabbing some of the liquidity above this high. So you can see this is on the 4-hour chart. This was back in May. But right here, we go back to a low time frame. You can see price swept the high, came back below and back tested it perfectly as resistance. So this would be a swing failure. You can technically trade the initial reaction, but this common practice would be to wait for a retracement and back test, and then you short the back test with very tight invalidation right above that new high. So it gives you a really tight entry, which is really tight invalidation, which is the great thing about swing failures. And they oftentimes give you major turn positions. So like this, you know, relatively likely to be the top of a major move on 8 rather than any of these other pivots, because you have this nice swing failure into a key fib golden pocket here, a high time frame one. And you have some local ideas to sort of support the resistance here. So obviously there's a lot of pressure on me too, right? You know, I think about that a little bit as I come to this live stream. Is I'm analyzing the market, I'm doing my analysis, and I'm saying, you know, especially on low time frames, hey, on a low time frame, this is resistance. We're getting bearish absorption. You know, this is something that is tradable. This is how you trade it. And the last thing I want to happen, of course, is me to say something and then price just to do the exact opposite of what I say is most likely. But that can happen, right? Let's call it, when you analyze the market the way I do, let's call it something like a 70% chance that price is going to behave the way you might expect it to. Sometimes it can be a little higher, just depends. But it also depends if you're trying to, the lower the time frame, the idea that you're looking at, in some ways makes it a little less likely. Like if you're not aware of your higher time frame ideas, so you could have all this great low time frame analysis and not be aware that there's this, let's just say you have all this great analysis here and not be aware that there's a massive idea here, a point of controls, you know, that's really well defined, a swing failure, all these other things. And yeah, if you're not aware of that, then price is probably driving towards that and you might not even be aware, and you're just looking at the 5-minute chart. That's why I recommend that you do not do low time frame analysis without first being aware of your high time frame levels. Because if you're trying to look and analyze price on this 5-minute chart and you're not aware of any high time frame ideas, then typically you're going to get wrecked. It's great when you have low time frame ideas that coincide with high time frame ideas. Yeah, but I mean, it makes sense to me that we're going to see pullbacks on a few things. Man, I wish this vet idea was a little bit cleaner here. It would have been very nice to reject from here. My entry trigger would have been coming back below this low. You just have this really nice ascending trend idea. But It is not very clean. And sometimes price action isn't clean. I prefer cleaner price action. This is, I'd say this is not, this is a little ambitious trying to pull this as any kind of trend here. You have the lows, this trend aligned with this high trend here, but these are so close together that it's kind of like, is this really a trend? I don't think so. I mean, it could be, but it's kind of hard to tell. This sort of just creates a bias. It is funny with like the with like winning trades or losing trades. I mean, I've had some, you know, I lose trades, obviously, right? Everybody does. All it takes to lose a trade is for me to enter into this ape short this morning. And I did lose a trade yesterday. But all it takes is for me to enter into this short and then price do that. And then I lose. But I don't lose very much. I have really tight invalidation with really big risk reward. And so it's kind of funny because I want to just look at this really quick. So I shorted Gala up here, right? It was in the members group. So shorted Gala up here. Obviously, we had a really nice rejection. It was a fun trade. And I shorted XRP. Let's just go to that really quick. Oh, this isn't even the chart. Whatever. Let me go back to ABCDE Gala. I shorted XRP from the top as well. It's not even on there. Weird. It doesn't matter. Anyways, but then you take a like a small stop loss or something, and inevitably somebody will be like, "You lost a trade. How dare you?" It can kind of, oh, there's a little ascending trend line idea here, or ascending channel idea here on Bitcoin actually. That's surprisingly, these are actually quite nice to spot. They're hard to spot because the trend is so shallow. But you know, all you needed was this angle, this as your anchor, and it gives you this high into the golden pocket. That's quite nice. Obviously, I didn't spot it till now. But anyways, it can kind of bring you down a little bit because like I had a member who I'd been on, like sometimes I go on crazy win streaks. Like there was a time, this was probably 2.5 months ago or 3 months ago. I think I went on a 25 trade win streak, and it was like, they weren't scalps. Like a lot of them were just massive, like 20% moves. And a lot of them, most of them were shorts, but some longs and whatever. But then you go on like this massive 25 win streak, and sometimes it's a new member or whatever. I don't remember when this guy joined, but I lost a trade, and it was like the first trade I'd lost in like 20 plus trades. And he's like, I talked about that losing trade in a video, but I shared one of my trades on Twitter, and he comments like, "Don't be a scammer, disingenuous. You just lost a trade. Why don't you talk about that?" I'm like, well, I'm gonna talk about it in my next video. I mean, I obviously talk about it to my members, right? Because if I post a trade on Twitter and it doesn't work, like an idea or whatever, I'll talk about it. But there's no point. There's a lot of trades I take in the Discord members group that I don't share on Twitter. So it doesn't make sense to me to update everybody publicly on every trade I take, or if I took a loser, if I didn't share that trade on Twitter. But usually I will talk about the losing trades I take when I do like video updates, because I think it's just important to talk about that level, what happened at it. Anyways, I'm kind of ranting here, but it is inevitable that people get pissed off when you lose a trade. So let's just look here too. So because we have this ascending channel idea, we have a perfect bounce off it too, right? So we rejected from this high, got a perfect touch at the middle, which also came into the VWAP. This is the daily volume weighted average price. This is also an important indicator, especially for scalping. It's sort of like a volume profile in a way, but it's like a moving average with a volume profile. So you typically, you can, a lot of times like it resets every day, but for example, a lot of times you can claim it and it will be support. And as you move away from it, prices are drawn back to it and it can be support again. You usually want to use in confluence with other ideas. And then as you lose it, it can act as resistance as well. Say it would be like this. So in some ways, the scalping stuff on low time frames isn't really like conducive to like a major pivot high being come in. Because what do you really want to do here? I mean, you could scalp retracements. Like let's say we started here and this live stream started here and it was like, hey, this is a nice short setup. You get a rejection. You could certainly take profits and you could probably have scalped along in here. This looks like a 382. No, we washed through the 382. But anyways, ideally you would have found some of these ideas. This is a really nice interaction in the middle here. Maybe got a scalp long here, kept some of your short open, re-added to your short. But right now, the only thing to do up here was to short. Like I said, short or no trade. And so now you're just kind of waiting for deeper, but the problem is you actually probably wouldn't want to scalp longs here, in my opinion, because you've had this rejection, you've had your initial bounce, and you've had a second rejection on the retest, which was that there's technical levels here too, right? And you've swing failured and all this stuff. So now if price starts coming down here, well, you probably don't want to try to scalp long here again. You're at least going to probably sweep that low. But once you lose this low, there's not really a lot of structural support here, so price is just likely to carry on. Of course, you could bounce here before you lose any of this consolidation or structure, but it's not really a high probability trade from my perspective, although you could bounce here to start trying to open longs here after this second rejection with bearish absorption. I think a sensible target for this would be to be back down to these lows. Sweep this low at a minimum. Let's go to someone saying let's try to find an entry on VET. One thing is the VET Binance chart and Bybit chart are quite different. Like this ascending channel, I don't know what happened, but it's so different on VET, or sorry, on Binance. It's like crazy. Like these pivots are like way different prices. You can see here. Yeah, I mean, losing this high would be a swing failure. I might just short it. Yeah, I probably will short this. Let me just get the order set up. I'll be right back. I'm just setting up the order. I like to get all my stop loss entered, all that fun stuff, and just prepared to execute. also trade on a couple accounts. So sometimes I like to open positions on the same direction on the same accounts. But sorry, I was actually trading on a different computer there. Or setting up my order. So what I'm looking for is, give me a second, it's pretty much this. I'm looking for this high to be lost. So essentially, using Bitcoin as some confluence here, but looking for this to happen. And if it happens quickly, I might just enter. I have a stop loss pretty local. Of course, could just get wicked out. The only thing I would caution, depending on how you all are trading, is if you're opening, say, a short on Ape, a short on VET, a short on Bitcoin, a short on ETH, and you might even think you're using risk management, but it's very hard to actually, you have to be very careful to calculate your risk management if you are opening shorts on 4 or 5 different things at the same time. Because what happens if Bitcoin pumps here? Well, everything's going to. So you have all these shorts, and you just got stopped out of 5 shorts. Maybe you had 2 or 3% risk, which I'm sure most of you trade with a lot more than that, which you shouldn't. And even with, 2% risk, you just lost 10% of your account. Most of you probably trade with 10% risk, and you just lost 50% of your account trying to short. So what I recommend is just to trade. I still haven't entered yet, by the way. Just to trade 1 or 2 things with tight risk management. You do not want to open. In crypto, since everything's correlated, you have to be very careful opening a bunch of trades on a bunch of things all in the same direction at the same time. That's the moral of the story here. And by the way, for anyone new tuning in, this parallel channel is maybe just nonsense. I don't really like it. I'm going to keep it on my chart because it makes me feel better about this idea of shorting. Just kidding. But mostly waiting for this higher time frame idea for me. We've wicked through this, which can happen. It's not a big deal to wick through a level, but we have to show some weakness. One of the things that can really save you from just shorting breakouts is wait for some weakness. If all we're doing is flipping support into resistance, then you don't necessarily want to open a short. You just wait for some weakness. It increases the odds a lot of this idea working, even if it's local, right? I mean, a bigger sign of weakness would be to lose these highs, but just put on, if you like an idea, put on a position and manage your risk. Victor King saying parallel channel from 24,100 and previous high was golden long until the top and it's shorted. Very nice. Very nice. Let's just look at order flow here. See if we have any bearish absorption forming. Nope. Nothing new. Still have our bearish absorption at the highs. Always flip through to see if anything's kind of stands out as Uni is retesting this golden pocket. again, you'll notice price action behaves quite similarly across all assets. So again, golden pocket, 786 rejection. Pretty much the exact same thing we looked at on Matic. So we had 786 to 786. Sometimes it's nice just to look at where the general market is at, the crypto market, because if everything is at resistance, typically, and we wick through the golden pocket into this point of control, but typically it puts the odds in favor of some kind of rejection here. So Bitcoin, it doesn't look as clear, right? Like this doesn't look as weak, or maybe even as great of a shorting opportunity on Bitcoin as it does on a lot of alts, because a lot of alts have pumped up through, broken out, right? But a lot of them are at major resistance, so we can see how that all develops. Let's look at the S&P. S&P moves quite nicely through golden pockets as well. We had a nice kind of descending channel idea here that is now broken. So let's see. This pivot high, it's a likely target. We got a minor rejection here on the daily from the golden pocket from this pivot high, but obviously we've broken out and claimed it. We had to delete this fib. There's also the 382 from the absolute high. And there does actually look to be, sorry, I'm kind of jumping around like crazy here, an ascending channel idea here, but it's kind of hard to say. This, I think, will be a little wide. Might just be something locally that we've already broken out of, maybe. No. That's quite clean on the S&P. Just a clean parallel channel. Wonder if this would sweep this high. Yep. So that'd be something to watch too. If you push up into the top of this channel, you likely are going to sweep this high, which is grabbing liquidity, and then could reject. It's just a local idea coming to a swing failure. I don't know if there's really any great fibs interaction here. You could maybe justify pulling from here, from this high before the impulse down, but this probably makes more sense. But this is possible, because the reason you pull from something like this is if you're looking at it as some sort of Elliott wave idea. It could be like a wave 1, 2, 3, A, B, C. I don't know. Something to watch anyway. Someone's saying Gala is super weak. Kind of annoyed because I want to short it higher. In that case, is it best to just avoid the short? And that's Louise. He's a new member. Is it super weak? I don't know if it's super weak. Certainly rejected from some ideas here. I mean, it's kind of like really subjective to read anything like this as super weak or super strong, because we're really just consolidating. I mean, we've had this wick up into the 786, but I just don't know if it's super weak. We could certainly reject lower, but my opinion would be this, to answer your question more directly. is you're usually better to wait for the nice levels. You know, you can watch price action and say like, oh, I really want to short up here, but you know, and whatever reason, now you're looking at this and you're saying, but it's so weak, we're not going to get it. So I'm just going to open a short here, let's say. And I'm not saying there's no short ideas here, but what I'm saying is if your idea is to short higher and you have nice levels up above, you're usually better to wait for those because it's very likely that it's FOMO making you think that price action is super weak when you have an idea for higher. Because is this that weak? I don't know if it is. I mean, we have a rejection from resistance, we're consolidating. It would just be a shame to have a really nice idea. Like for me, a really nice idea on Gala is to push up, even to maybe take this wick high into this golden pocket, certainly sweep this high. We have the back test of here, right? This is the, I mean, I'm sure this is what you're waiting for. This is that setup I had shared in Discord. And that would be a nice short. I mean, you have a perfect swing failure, a back test of a key level, a key fib. Sorry about this message chart, by the way, everyone. There's a 382, a 786, and a golden pocket here, and the middle of this ascending idea. But anyways, this would be a nice short. So it'd be a shame to open a short now and then just have a pump up into this level. You could still trade it, but patience might be good, warranted here. I actually do need to set an alert here because I'm not really watching this very closely. Nice, somebody's doing construction outside. You know, one thing is too, Luis, is, you know, you could say like, should I just short here? Price action looks super weak. You're waiting for higher. Now, let's just say price does come straight down. It can feel like, oh, I knew I should have taken that trade, and maybe you can be disappointed. I'd much rather miss a trade than to take a subpar position. But it's really important not to go down that rabbit hole, because then if you start justifying taking trades because you don't think your level's going to get hit, then you start taking random trades because you just think you should be taking trades early because suddenly you're just not thinking the level's going to be hit. You don't know what's going to happen. So for me, like, let's just say my typical way of trading is I'm going to create a fictional level here. But let's just say I want a long idea from here. If we say sweep this low and reclaim it, and I have a short idea here. Well, if I wait, one of these ideas is going to happen eventually. It could take a day, a week, a month, a year. A year is not very likely. But eventually, this will happen or this will happen. I'll have the opportunity to trade it. But now, when I'm in the middle of two ideas, and I start feeling like I should try to open a position, that can get you just into bad position trades. I mean, sometimes they'll work out, but the way I look at it is if you're patient, you can trade really great high probability setups over and over and over again, and that can be all you trade. And a high probability setup doesn't need to be a high time frame idea. You can have a high probability scalp, but the principle applies. Like, I think somebody said they scalped this when we were talking about that short idea. They took profit one and stopped a entry. I don't know if they've got stopped out, but just, you know, you have an idea, resistance, take a short, get a 1% move, take some profits, stop it out. That's a scalp. Probably smart to think anything from here is a scalp, even if it comes into the lows of the range. Because this is, to me, unlikely to be a major pivot high. And if it is, well, then you carry some of that position. You take profits, but carry some of it with a break-even stop, and maybe you just get a short that carries on way, way deeper. I need to lock my analysis because I do that a lot without noticing. It's like I'm trying to move across the chart, but actually grab something and move it. I think the best way to remain patient, and I will maybe come back and look at some of these altcoin requests in a minute. I didn't really, my plan isn't to make this altcoin request live stream. I might look at some, but ideally, what I'd like to do, and we'll see, I've never done something like this before, is essentially run this live stream all day and focus on just analyzing local price action and giving my thoughts live here. But if I start piling on like 5 other alts or 10 other alts, it's just going to be too much. So, but we might take a glance at some, maybe do some higher time frame stuff on some other alts while we wait. But sorry, I'm kind of scatterbrained. The best way to be patient is to mark out your levels and set alerts. And then don't really look at the chart. You could chart other things. You could look at the chart to chart like higher time frame ideas, whatever it is. But come back and look at the chart when your alerts get hit, right? So on Gala, if this alert comes, I have an alert right at this high. Might be smart to set it right before it so you have more time to, if you do sweep it, to get to the chart. I have alerts down at these lows towards this point of control. And I'll come look at Gala when those alerts get hit. You typically don't make better decisions when you have ideas and then you just stare at price action and try to make decisions just based on, oh, up, down, is it, should I enter, should I, before a key level's hit? Because price never, like even when Bitcoin was coming up here, I had this long, but it's just not necessarily, it looks like you're getting rejections a lot of the time. These are big rejections. Price is pumping, so it can be better just to wait for key levels, and if you don't have a key level, don't trade it. And you'll miss trades because of that, because there will be something that you just didn't identify. But if you don't have, I don't mind missing trades, because how can I trade something that I didn't have a plan for? I don't need to feel bad about that. I can maybe look and find something in hindsight and be like, oh, I missed that. Maybe I'll do a better time of looking for something like that in the future. But I never feel bad about missing a trade that I didn't have an idea for. Because if you start feeling like you've done something wrong when you don't take trades you don't have ideas for, that infers that you should be taking trades that you don't have ideas for. And if you start going down that path, then you're just opening random positions. And your win rate will get much lower. I can guarantee that. I might run down and grab some coffee. It's made. I just need to put it in a cup. Let me do that. Just gonna look at one more thing before I do that. All right, I'll be right back. All right. 1 second. And go back to Bitcoin here. What I might do actually is take a, maybe try to do some kind of local Elliott wave idea. Something on a low time frame. Let's build an Elliott wave count here on Ethereum from this low. Let's assume that this low was a wave 2, 1, 2. So I'm just going to put some random stuff here, and we'll fill these in later. This could be just useful to look at how you might build an account. So the idea would be here, just a very clean flat. Should probably pull that from here. So you have an ABC flat. Technically your wave 2 gets put here. A flat is when essentially you have a wave A, your wave B comes right in, retraces 100% of your wave 1, and then your C comes back down and it retraces to your wave A, 100% of your wave A. So it's kind of like a double top, double bottom. That's a flat. You can have expanded flats, which we might see some of those in this count on our lower time frame, where your B can come above your wave 1, and that can be the 123.7, 123.6. That would look like this, and that makes an expanded flat makes a deeper wave C more likely, or potentially a running flat where C doesn't even come to here. It would be a shallower, maybe a 78.6 of wave A, B. But anyways, for now, this makes sense. It's a flat. So we have a wave 1, a flat, a strong impulse for a wave 3. I gotta delete some of this stuff. It's just too messy. Wave 3 should be your strongest wave. I'm going to do a couple things here. So first I'm going to pull an extension. I'm going to do a trend-based fib extension. So this first high came in at the 1618 trend-based extension. The 1-to-1 got some interaction as well. The thing about so your wave 3, it needs to be structured as 5 waves. So there, because of how the market is fractal, it only makes sense if there's a sensible count on a lower time frame. Let's just come up with some ideas here. I'm just putting on random pivots. We'll measure some stuff out here. Very nice. So we do have on this lower time frame, this is the 1 hour, you have a 382 pivot here. I'm going to get rid of this. I'm just going to clean this up for the sake of this count. Let's clean this off. Perfect golden pocket here. So this is how you start building your wave counts, or how you would maybe even look at one, is if you assume that this was a wave 1, then you would pull a fib from the bottom of wave 2. And this is where you might, why sometimes people ask, why'd you pull your fib from here and not from here, here, here? Well, it's just potentially assuming that wave 1, then you retrace, do a 61.8% retracement off of a wave 2, 3, 4. These are subwaves. these also need to divide into 5 waves, these subwaves, so it can get kind of complicated. 1, 2. Maybe you did something. It's a little hairy here, but let's carry on. Let's just see if this can make sense. I think it would make more sense to me that this is a wave 3. These subcounts can get a little hairy, but let's I just like to kind of build deeper before I kind of make any final assumptions. Then I like to see if I like any of the potential price action. So let's just say we came up to here. A golden pocket retracement would quite work. It would be very close. Wave 4 can't come below wave 1. That invalidates the count. That maybe could look at a 50% retracement here as well for wave 4. Not an uncommon wave 4. And maybe a 1-to-1. What would a 1-to-1 extension look like? Oops, that's not my trend-based fib extension. Be quite a big wave 5. It's possible. Okay, well, there are some potential wave 5 ideas here. I don't really like it. I think it's likely that ETH pushes higher. These were both two very nice retracements. But we're at resistance now. So, locally we're at resistance. We could come back and sweep these lows. So if, let's just say, you're looking for something like that maybe for a correction. We'll see. I don't think the count is very clear here, up here. I don't think a wave 3 is very clear. This is probably more likely with some corrections on the way. Somebody mentioned XMR. I know there's ideas here on XMR. This channel is not perfect. But you can see XMR came right into the 618 from this pivot high on a high time frame here. And I think this was a 786 retracement. You'll see this over and over and over and over and over again. This is why I like trading these ideas. So you know, here's a really common, here's a really common way that price interacts with levels. A major 618, a rejection into some kind of key support idea, and then a 786 local retracement. On altcoins, that is very common. So looking for that 786, even had a nice little swing failure here. It's really nice. Same thing on Matic here. We did come into a key level. It's local 786 retracement. So it's always something to look for, especially just for a scalp entry. It's low risk. The great thing about the 786 is when you're trading a 786, your stop is typically above the previous high. So, you know, your invalidation is usually relatively tight because you've retraced 78.6% of the move, which gives you typically a nice stop loss. And even if you carry on higher, you usually can at least get a TP1. Uh-oh. Ethereum was at 1666. That is never a good price to open a trade at. There's lots of resistance ideas here on ETH. It wouldn't make sense to, you know, it wouldn't make sense to even let's call this a potential expanded flat. Just as I look at this more. Let's see where the 161.8 would be. Elliott wave counts are very subjective. That is not very likely. The 123.7 comes right into the golden pocket. So Elliott wave counts are subjective in the sense that there are so many different possibilities. And as price action progresses, you can kind of eliminate some. But let's remove some of these fibs here. So this could be a possibility. But this couldn't be a wave 3 then. Because this would come back into the top of wave 1. Just barely. I mean, we could front run it too, right? We could, if we come into here, technically it's still valid. Sweep these lows. And then you put in a wave 5. Because you have the 123.7 extension here. So this could be an A, B, C. This could also still come in as like a running flat as well, which would align with this trend line potentially. Nope. Typically a lot of something like this. That could be, this could make sense actually. So this is one way that you would maybe think about putting in a running flat versus an expanded flat here. And a running flat is where your C doesn't come in below the A. This is quite a nice interaction here. So let's wait and see how it plays out. Anything from here is just a scalp, right? Like your high time frame ideas would be things like this, things like this. Somebody's asking if I could update my trades on Discord and Telegram in the members group if I take something. Yeah, I should do that. I always have a hard time remembering to do that when I'm live streaming. I'll try to make a point to remember. I think someone's saying you can't find the add alert button on Bybit. I use TradingView for alerts. I didn't realize this. I guess alerts are a paid thing. I've had a paid TradingView for 5 years, so I don't actually remember what's free and what's not. But I think Bybit, there is a little alert button on the trading page that you can set. Someone asking if I use any oscillators. I get that question a lot of other indicators. Like something like RSI, for example, is very popular. I don't find RSI to be that helpful. And what I think people maybe don't understand how RSI is calculated. And so it's a lagging indicator. And all is telling you there's a momentum shift. And so the way RSI is calculated is this. I think the look back period's 14. So let's just say you're in a strong uptrend and then you start having consolidation. RSI is telling you that, hey, price was trending. If we look back, the average, momentum of price was this. And now that momentum is essentially stalling out. Well, you can just see that in price action, right? And so you get overbought, oversold, but it's essentially telling you, hey, there was a strong trend, and now we're consolidating, or the momentum is slowing down. It's like, okay, I can see that, but sometimes you consolidate and push on to key levels. Sometimes you don't. So it's like I don't really need a momentum indicator to tell me that the momentum is shifting in price action, because it's just measuring the distance candles are traveling and just creating an average and then dividing that by whatever, multiply it, divide it by 100, and gives you that like 1 to 100 scale. And to me, it's not that relevant. But people will say like, hey, wow, look, price, the oscillator or the RSI was showing this and price reversed. It's like, well, yeah, it's showing you that price is reversing when after price is reversing. Like it's created. Yeah. Anyways, I'm not saying it's useless. I'm just saying that you don't really need it to get the same information. Somebody's asking if I use order blocks or equal highs, equal lows in my analysis. The thing that I like to do the most is I like to just look at clear liquidity zones, like sweeping lows. This was actually a really nice long. It was off this parallel channel idea on a higher time frame. But when price was coming down here, obviously this gap, this void was likely to be filled. I was looking for shorts up here, actually looking for some sort of ABC correction. I missed this long by 0.2%. It was 786. I need to revisit it just to trigger myself. This was painful. I was waiting for this level to be tapped, and it front ran by 0.2%. But anyways, when we were down here, I'm looking for these highs to be swept from down here. I'm even was looking for them to be swept from down here. I'm just looking for price to continually be grabbing liquidity above highs with key ideas. Even this, even on a lower time frame, ideas, these continuous rejections create liquidity zones that price would like to move through. Look for key technical ideas, fib retracements, channels, and those can offer nice low risk entries. And low risk just meaning your invalidation can be pretty tight, especially on scalps. Couple questions. Somebody says opinions on fib time. I like fib time. It's very interesting. I use it. Somebody's asking Olivia if she's a paid member. Somebody asked me, I can see Learning Ape and Lucky Ape as monthly package. Which one are you? I'm both. The Lucky Ape comes with all the educational content as well as the daily updates. It's basically where I show live examples, sort of like this, of the analysis I use, the trade setups I'm interested in, why I'm taking the trade, sort of employing that stuff with live updates. I don't like signals. I don't believe in signals. What I do believe in is doing live analysis. And I think it's one thing to show examples of ideas for educational purposes that are in hindsight. It's much more powerful to talk about these ideas live on charts because you don't, everything's so obvious in hindsight. If I take this idea, for example, as a long, why do I always draw so many lines? This idea where I long this ascending channel idea. Of course, now it's like, well, yeah, of course you would long that. Look at it. It's just a perfect ascending channel. It's so easy. But then you rewind price to here. And you see this. Who's longing that? Be honest. I did. And I shared it live. But when, yeah, I actually want to replay that again a little slower. This is not an easy long to take. Damn, this is very slow. Let's go a little faster. Like that, almost no one's actually going to long that. It looks very easy on a hindsight thing. So anyways, I think it's very powerful to talk about these ideas and to trade them live because it makes them more clear. This is almost impossible to see when there's price actions happening because this price action is generating so much fear. It seems very scary to long here. Somebody's saying, are they tier 1 if their cost is $97 a month? Yeah. So the Learning Ape is just, it's just like learning materials, going over these concepts. Just the idea is that someone can take some time to go through the educational videos, to go through the concepts, to ask questions, and before they're really trying to absorb this stuff on a live chart. Someone just saying that they've been a member for a month. I share a lot of content. I do share a lot of content. I mean, I might do 15 updates in a day. I mean, I'm on the charts a lot. It's my life, essentially. And sometimes I like to just point out resistance and ideas and absorption. I don't necessarily trade everything that's tradable. I just like to be aware of what price is doing. And a lot of times, you know, like, for example, you might just use some of these levels for take profits, right? Or to maybe start cutting back on short positions, things like that. Like on Gala, I'm aware this is resistance. I'm not necessarily wanting to short it. I have my shorts from up here. I've taken profits on them. I'd like to add back here. It's just a lot to, and one thing I find, like I really, especially with my live updates in the members group, is I really need to delineate between scalps. Like to me, it's obvious what's a scalp and what's a higher time frame idea, but it can get a little. I think it can be a little overwhelming if you're like sharing at the same time on multiple things, scalp ideas, swing ideas. You know, I also trade long and short at the same time, so that means I have my shorts from here, and if I take a long on Gala, it doesn't mean I'm closing my short. Bybit allows you to trade short and long. I have a short idea that's completely separate from my long ideas. I might have a long idea that could be a scalp, could be a medium time frame idea, longing for a retracement, and that's completely separate from my short ideas. So I'll take profits on my longs, take profit on my shorts, let my shorts carry on to deeper targets, let my longs play out, and most people will close all their positions. If they have shorts and they're going to open a scalp long, they'll close their shorts, which they shouldn't do that for a scalp long, because now you're in this weird position where maybe that long idea doesn't work and it was just a scalp, and now your shorts close. Maybe price just carries on and keeps dumping, and you had your great short idea and you closed it for a scalp long. So I've seen you've asked twice now, Lucky, how do you use the 123.7 fib level? Okay, let me try to answer that in a meaningful way. The 123.7 is an Elliott wave idea for corrective waves. And this is an old range, an old example. The basic idea is when you're looking for potential corrections, is you would, let me put on the 1 and the 0, is a B wave might be a 123.7 correction of this price action, let's say. So you take the pivot high to the pivot low. So you pull left to right, you have the 123.7, and it creates a 123.7% extension of this price action. And so it's always an important level to watch, because that could be a B wave. Again, this one to the low is you're taking a low to a high. So you put in a low to a high. You have a 123.7 extension of this price action. Then the 1618 is also important, because like say an expanded flat, well a wave B could go anywhere from the 123.7 to the 161.8. And your wave C would typically be a 161.8 after wave B. So it's kind of, yeah, all that being said, it's just something to be aware of in a potential corrective wave. Yeah, somebody's asking if you can short and long on Bybit at the same time, or yeah, you can. So there's two cool features on Bybit. One is TP, take profit stop loss on select position. So that means what you can do is you can, let's just say you have a short from here. Then you can add to your short, and each position can have a separate stop loss. It's going to show you an average entry, but you can have a stop loss here for this short, a stop loss here for this short, and you can keep adding and have separate stop losses. And so why that's nice is because if you're good at managing a position, let's just say that you've entered short here, you've taken profit, you've re-added to your shorts, but this one has different invalidation. And so that on the added part, you have different invalidation. You now take profits on that. You put this position stop loss to entry, this position stop loss to entry, and you can manage your adds separately. I think that's very nice. Now, just keep in mind, it's not going to show each separate entry. It's just going to show your average entry, but you should be aware of where you're entering. and you can move those stop losses separately. You can also just collapse all your stop losses down into a single position. But the other great thing about that is because you can separate your stop losses, you can actually use stop losses as kind of trailing take profits. So let's just say I wanted to, I gotta delete these, they just bother me. I like drawing a lot of lines, but I don't like having them on my chart afterwards. Let's just say, for example, that you shorted here and you wanted to take profit at these lows, but you're watching and these lows just get washed out. And so you decide, well, instead of actually taking profit here, I'm going to use a partial stop loss. So maybe it's 30, 40% of your position. I'm going to set a partial stop loss here and let this trade carry on down. If I get wicked out, then I'll just take profit if prices reclaims this. Otherwise, I'm going to aim for lower profit targets and wait for some strength to take profit. And that might save you in a scenario where you end up getting a much bigger take profit one just because you're moving your take profit down as key levels are lost. So yeah, I really like that idea, that feature. And then the other thing that is great is that you can, on the USDT pairs, you can open shorts and longs separately. Let me turn off my volume. I have an alert going off. Which coin is it? VET. All right, so this is likely to be a short trigger for me on VET. Just want to put this up here. I'm just going to give it one more second. Sorry, I got to go over to my other computer for a second. So I have this order already typed in. I have my stop loss. It's going to be a market order. I have my size already typed in. I know where my stop loss is going to be. It's going to be above these highs. And I just have to execute with one click of a button. And I have entered short. So I'm always using risk management. I have no control over what price does next. I have an idea. I'm trading it. It will either work or it won't. I'm perfectly happy with the loss I would take if it does not. And the idea being, when you're looking for setups, is your risk reward hopefully looks something like this. 10 to 1, 15 to 1, even 5 to 1. And the idea being, if you're playing a game of odds and you're using risk management, you can place this bet 10 times and you can lose it quite a few times on this type of setup and still be profitable, right? So you're looking for those nice high risk reward setups that you could have a high loss rate on and still make money. I think that my setups typically have a very high win rate, so I get kind of the best of both worlds. It does not bother me to lose trades because when I do, my invalidation is usually close, my risk is managed, my reward is much lower, and I typically, I have quite a high win rate. So perfectly happy to put my chips in, I guess. Okay, so I'm going to continue with what I was saying about Bybit, which is that you can open your longs and shorts at the same time when you use hedge mode. You have to turn that on, I think. But what that does is it just creates two completely separate positions. You have your long with your long stop loss, long take profits, and you have your shorts with the same. And they just run completely opposite. Completely together on the same chart. It's great. It's really powerful because I know this is hard for people to wrap their head around, but it does not make sense to necessarily close. Like, let's just say on Bitcoin, if I have a long from here, I want to look for shorts up here, but I have these swing long ideas that I'm adding to longs, taking profits, but leaving some of these positions running. It doesn't necessarily make sense just because I'm shorting an idea to close all my longs. Because if this idea for shorts, let's say, is wrong and price breaks out, well, that's fine. I get stopped out, but my longs can just carry on. So it does make sense. It takes a little bit of getting used to. Somebody was saying that they're in the States and they can't use Bybit. I have heard tale of people using VPNs. There's no KYC requirements. I'm not necessarily recommending you do that. I'm just saying that people do. If you want to use my Bybit link, it's somewhere. I don't know. If you want to find it, you can. You get the maximum sign-up bonuses. Maybe it's in the description of this video. I have no idea. But if you don't use mine, you should use a partner link because you do get some added bonuses for using a partner link. It would be nice to get a nice position here on the live stream. Maybe it's this vet short. Do you want to just keep ape up as well? Okay. I'm just reading some comments here. Okay, so someone's saying that they use a VPN, but they don't want to get their funds frozen. I will say I do know quite a bit of people who use Bybit with a VPN. I personally have never heard of that happening to someone, but I'm not saying it can't happen. I don't know anyone personally. Somebody's linked to like stories online of it happening. I mean, I was KYC'd and had funds frozen for a year on Binance, and I sent in like 5 pieces of ID, and they kept rejecting it. I finally did get the funds, but I'm not a big fan of Binance. There was another question, and I remember it being important. But let me see. Can you use a partner link if you're already on Bybit? No, right? No, you can't add a partner link to an existing account. The only thing you could do is create a new account, which I think would just require a new email or whatever. I hope you guys are enjoying this live stream. I don't really know what to I didn't really know what to expect with this because it's just, you know, sitting here looking at charts all day. But it'd be nice to get a nice short here on that. Maybe just lock in a take profit 1. Be nice if this ape idea plays out. Let's just look at a few things here. We'll see. We're coming up to an important time of day. I can actually, I'm going to show you guys this. It is quite important. It's probably one of the most important things to consider. Let me just turn off everything. All right. So there's a couple times of day that are really nice to trade, and one of them is this 4-hour candle coming up. It's the second 4-hour candle after the New York Open. Why am I zoning out here? Okay. Be around here. We'll just bear with me for a second. And I am just doing this to show an example. All right. So why is this an important time of day? Well, an inordinate amount of pivots come in around this candle open. So you can see pivots. These are all, the spacing of this is just 1 to 1. So this is all the 4-hour candle in the day. It's the second 4-hour candle after the New York Open. Pivot, pivot, not so much here. Had a little one here, pivot. So look at how many key pivots are actually coming in on this open. You don't always get one. Pivot. It's just a very high, either for an impulse or a pivot. Like I said, you don't always get one, but it's an important time of day to watch. And that applies to the New York Open as well, and new daily candles. So if we started to space this out to the New York Open, I am going the wrong way. Start looking at those pivots. Last week, the New York Open wasn't great for key pivots, but typically it's quite good. So I'm just trying to get this perfect. That's close enough. You can see New York Open. This impulse came into the New York Open. Nothing. Actually, I need to make this perfect because every time it goes one step further, it gets messed up. Why won't this go? Hold on. I do want to show this. Oh, it's because I have this wrong or what? There we go. All right, so impulses or pivots from the New York Open, I mean, or close to, right? It's that first kind of hour. You have an inordinate amount there as well. You don't always get one. It's a nice one, very nice. The pivot high comes in right 15 minutes before the New York Open. And so if you start looking at these key times a day, sometimes you can trade the New York Open up into this 4-hour candle, into the daily candle. Just if your key levels are being hit during the New York Open or some of these high probability pivot times, they can be added confluence. Somebody's saying go back and show scalps. They have a decent win rate swing trading, but their scalps get stopped out a lot. So I want to just make this point about scalping is people can get very enamored with scalping, thinking like, wow, if I can make this much money with swing trading, what if I trade 100 times a day? Typically, scalping is just going to wreck you. Scalping is the hardest form of trading. So if you want to think about, that a plan should be well planned out, well executed, you have all these factors that make a great trade, and some of that is your planning, your execution, all of that stuff. Execution is actually hard to perform. Even when you know what you should do, it can be hard for many reasons. Some of those are emotional factors to actually execute well. So if you put yourself in a situation where you need to plan out and execute 10 trades in a day, scalping, you're typically not going to be able to do it very well. it's going to be hard, and your trades aren't going to be very well planned out. You have to be very good, and you have to be patient with scalping too. Scalping, you still have to have key levels, and if your levels aren't being hit, then you aren't trading. Price might just consolidate in a really tight range that really isn't that tradable for a really long time, and then you're not taking trades. So, sometimes you get really nice, fast price action that is scalpable, and sometimes you just don't. So, what I find for newer traders is when they're scalping, they're just trading to trade, and they're just opening positions to open positions. Maybe they're even trying to make back losses they've made. And so, yeah, you would probably expect a lower win rate scalping than swing trading, just for a lot of factors, right? And a lot of those are execution. Someone's saying, could you show us the idea on ape? Yep, I showed it earlier, but I'll show it again in the live stream. You have this local ascending trend idea into a higher time frame golden pocket, a swing failure of a major pivot high, which obviously, even this is just a key kind of horizontal support resistance flip. We've grabbed the liquidity above the high. So I have that high marked out. Oops, I meant to not draw this line. I'm trying to drag the chart up, but I will delete these. So we swing failure the high, and then we come back and have a perfect back test. And that is, I have slides that are just hypothetical price action. That's what a swing failure is. You have a significant high, you wait for price to come back, sweep it, and then back test it. And that is the technical way to trade a swing failure, ideally at a key level. So if you have a key level, swing failure, you wait for the liquidity to be grabbed, price to move back below, and you short the retest with a stop above the high. And that is a technical setup, and that's what is being traded here on ape. That is, the great thing about them is most high time frame reversals, lows and highs, get generated off swing failures. So they give you a great potential swing entry right at the high or low with very tight invalidation. That's technical. It's not just a random stop loss. It actually is a technical stop loss, which is what you should always be looking for. So that's the setup, basically. And it's always nice to have some kind of added confluence here. You have the swing failure, you have the level, you have this kind of trend line idea. It all comes together to make, I think, a nice short setup here for a potential swing short, because this is a high time frame level of resistance. So the risk reward's quite good. Yeah, I am in an ape short, which I did. I know you're in the members group, Calvisi. I did update that in there. I'm quite certain this morning. Oh. So even on VET, there is high time frame resistance here. This isn't such a as a high probability swing failure. So I'm looking for shorts up here on VET, and what I'm looking for is just a local swing failure as my entry trigger. I don't think it would get pretty suspect to keep shorting this. If I get stopped down with swing failure this level again, if I do it, I'd take profits right away, right here. But you have to be careful shorting repeatedly when price action is grinding up like this. In some ways, I shorted this swing failure initially, and I took profits off it. I got out with a winning position. There was no major rejection. In a way, the only thing that saved me here from taking a loss is I took a quick take profit and set my stop loss to entry, and then went to bed. But if you're careful, you can repeatedly short swing failures, even on grinding price action. But you want to take profit quickly, stop loss entry. And if you get stopped out, you can always re-enter, wait for another setup. And some people don't like trading like that. But let's just say that keeps happening. Say this happens, and you take profit, set stop to entry, grind up, swing failure again, enter, take profit, do it again, and then maybe eventually the top comes in and you dump, and you've shorted it 5 times, and each has been a small winner. Maybe you take 1 or 2 losers on the way. Who knows? It depends what happens. And then you end up rewarded with a position from the highs. So these little local swing failures can just be great local entries, but you don't always get your take profit one. Oh, somebody's saying when you say that you will take a certain technical level an entry if there's a strong reaction, what do you count as a strong reaction? Okay, so there's a kind of a few things you could look at. High volume is important. So high volume rejection, it'd be nice if you see a lot of longs opening into that resistance, even a lot of shorts being stopped out. That, can be a strong rejection. Let's look at this on the 1-minute chart. So if you see this coming into a key level, this big impulse on really high volume and this rejection, it's not to say we can't push higher. It's just, to me, that could be just an entry trigger. You don't know what's going to happen next, but you're coming to a key level. It makes sense. You've identified beforehand that this is a liquidity zone. And you ask yourself, why is price pushing up to here? Does it make sense? Once you see all that volume come in, it starts to make a lot more sense. Because you might have suspected there was liquidity up here, and now you can see there was liquidity up there. So let's say market makers are pushing in, stopping out shorts, trapping breakout longers. You enter off this just reaction off the level. What isn't a reaction? Well, this isn't a reaction, right? If price just pushes through the level, and sometimes that happens. And then that's actually the best case scenario. If price just blows through a level that you're interested in, because then you don't have even the thought of taking a trade, because sometimes you get a reaction and then price rebounds. But yeah, I mean, I think trying to overcomplicate what a reaction is a problem, because where people go wrong is they're trying to what's the term? They're trying to find certainty, right? Nude HDXYZ, best adult dating site, apparently. I'm kind of new to this whole thing. I don't actually know how to get rid of that guy. Maybe I'll figure it out if it becomes a problem. But they're trying to find certainty. So like, I'll get questions like, when you enter, how did you know price was gonna bounce there? Like, what did you use to know that would happen? I don't know it's gonna happen. I'm just taking a position. There is a reaction. Like a good example that I gave a little while ago. Let me just go to this low that I traded. Okay, so I gotta just turn all this off for now. So this absolute low, this was a high time frame level. It's the 786. I didn't actually pull that perfectly. Let me just snap it to the actual level so it's clean. Whatever. It's about there. And then we had this key pivot low from a couple of years before, right? So this has been a level I'm interested in trading since way up here. I've made tweets about it, whatever. I've had ideas about this level. So when price is coming down to this level, I have it on my chart. I've been aware of it for a year. Let's go back to a low time frame. Price is dumping into this level, even on the 5-minute chart. We see price grinding down. And then I see this big impulse off the level, right? it's not like price has gone up 80% from the level, but I'm seeing a reaction. I know this is a high time frame level. I know that there's like no one in the world that wants to long this and people want to short it. So what do? I long it. I mean, and I just accept the risk. And it can look incredible in hindsight. Whoa, how'd you know? You don't really know, right? You're just judging. There is a reaction here. You can see there's a difference here in price action, and there is here, right? We are holding this level. We could lose it, but there's certainly interest here. If you start having some bullish CVD divergences, that could be quite good as well. Where you have the divergence between CVD and price, and you just put on the position, risk manage it, and see if it works. And that is about as close to knowing what's going to happen as I think you can get. One of the things that you're kind of trying to do is you're trying to trust your levels, right? Like not to the extent where you're going all in on them, but to the extent where if I have a level and an idea marked out, I trust that the vast majority of the time it's going to be a good level because I trust my analysis. I need to get back to local price action here. Probably go on the 1 hour chart, and that might make it a little easier. There's a hotkey for it, but for some reason mine doesn't work anymore. But anyways, I trust my analysis that, hey, I understand this idea. Like here, there's liquidity above here. This is a key retracement. I see a reaction. I take the trade. I take profits. That would be my thought process. I don't need to know what's going to happen. If it doesn't work, then it doesn't work. Liquidity is where someone asking. Liquidity is where retail traders place stops and where breakout traders take an entry. Yeah, exactly. So if you go to this 4 hour chart, can we think of any places there might be liquidity? Well, obviously, and this probably gets more extreme the lower you go. There's liquidity under these lows. I mean, you could assume, right? Oops. And there's liquidity above these highs. And I mean, locally, there's liquidity above these highs, this high. But the more liquidity, the better. So the idea being that, let's just say price, whatever, it does break down. And price comes into these lows, which is, there's a point of control right there. So price comes into these lows, into this point of control. Now, a lot of people who are long have their stops under here. So all their stops get hit. That fills long positions for bigger traders. People see this breakdown. They're getting really bearish. They start opening short, shorting. All the long stopped out. That's liquidity. That's needed for big traders to fill big positions. And say we bounce off that point of control. Now all the shorts start getting squeezed out, which is driving price up. All these longs that got stopped out, maybe even some of them flip short, are seeing this reversal. And now they all pile back into the market at the same time, which can cause these really sharp reversals, right? Is you have lots of people shorting, so you're setting up a short squeeze. You have lots of people out of the market because they've just been stopped out. As price starts reversing, they start FOMOing back in or pumping price. All the market makers filled their positions with that liquidity from the lows, and now they can just, maybe they do something like this, and same thing happens. Maybe we came like this, and now all these shorts are getting stopped out. All these breakout longers are longing. These guys are unloading all their longs, filling shorts, and the cycle continues. That's basically the idea of liquidity. And eventually you can have real breakouts where price moves a lot further. My ideal scenario is some kind of correction. Maybe it's in already. I'd be fine with that. And push higher, grab the liquidity above these highs, and then one more sweep of these lows, not taking this ultimate low with a much bigger impulse. That's what I'm looking for, but I'm just going to trade key levels. There's lots of other ideas, and I should generally be prepared for them. Just looking at some fib time ideas here. Someone's saying, so here I just want to point out that we have a swing failure on a low time frame. We have the perfect back test. It's not a very powerful idea yet because this is a very low time frame, but it is kind of playing out technically so far. Somebody mentioned Adam looks like it's about to dump. I imagine pretty much everything looks like it's about to dump right now. Let's take a look at Adam just for fun. I mean, typically everything's just out resistance at the same time. Probably a 786 here. We actually came through the 786. So one of the other reasons why, like if you look at the 886 and some other fibs, is you can start putting harmonic ideas together too. That's another, they kind of go quite well with Elliott wave ideas. I'm just gonna pull two parallel channels, one with the trend from the highs and the anchor at the lows. This looks actually much better. Oops, I deleted the wrong one. So this parallel channel would have given you this low, right? You have the high, because you could have pulled it back here. If you watch my parallel channel video, you would have your trend angle from the highs, your anchor at the lows, and then as price comes down, I'm sure it's a fib. Pretty nice. You can even get that little local swing failure. And these are just such great setups. If like, it's not that parallel channels can't break, but man, having these on your chart, being aware of them, you know, maybe they offer a trade every 3 or 4 days. Just parallel channels are where it's at. I've said they're the most powerful tool in trading. I think in terms of their simplicity to use, the only thing people get wrong is they don't use them in a predictive manner, I think, where you're using the trend angle and the anchor. I recommend watching my video on it. I don't know if I'm sure people do. I don't know if I've ever seen anybody use them that way, where they're using them as predictive channels. Okay, I'm gonna read. Someone's asking which CVD divergence would you weigh more on the USDT or USD pair? For Bitcoin, I prefer the USD pair. Your ideal scenario is you're trying to analyze it on a pairing where there's big traders trading. It's not really useful information if there's not big traders trading on that pair or even that coin, because you want CVD. These divergences are essentially just spot market makers and whales. And so if there aren't any market makers or whales trading, like for example, would you use KuCoin on some random altcoin and be like, hey, look, the whale? I mean, there's probably no one, there's no whale, there's no market makers trading on KuCoin probably. or like institutions. So oh, I never finished my atom analysis. Atom looks ready to dump is what I'm repeating a comment. I'm not saying my thoughts here. So let's just look. I mean, for me, I don't think there's anything wrong with shorting, retracements after a rejection. Maybe this is, I do have this sort of impulse to, this swing failure would have been a really nice short, by the way. You have this high, swing failure of the highs, would have been beautiful. I typically don't like, I'd rather short something like ape or vet at the highs, although as I say, I'll probably get stopped out. Not to say that there isn't a short here on atom, but like the idea for me is I'm looking for something like this, as if I had traded this swing failure on atom. I'm looking for setups like that. Like this would have been a beautiful short for me. And so atom certainly could dump here, there's no question. But finding these nice entries at the highs, I want to be shorting when someone's thinking, man, atom looks ready to pump. And I want to be maybe looking for longs when it looks ready to dump. But anyways, so that being said, the reason I'm shorting something like ape or vet is it's actually going to be more similar to finding this short at the highs of atom. And the risk reward is quite good. But there's short ideas here for sure. Perfect touch of the 618. Possible swing failure of this local high. And it would sort of just be looking at shorting a potential continuation. The only thing I don't like is this. There's always something to be careful of. Why didn't that turn white? So this was support, 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 and we're potentially reclaiming that horizontal. And if you want to just look at this as a horizontal range, and maybe consider that we might get something like a 786 retracement, because alts like those. Now suddenly, you maybe have this idea, which would be more appealing for me for a short on atom. If you hold this low, if this idea, let's actually get rid of this descending channel because it's not actually anything. Where you've claimed this low, you're back into this range, and you maybe look to push up into this 786, which would kind of coincide with the middle of this ascending channel idea. And it would be more or less a retest of this high that we potentially swing failure. But grab the liquidity above this wick, maybe even come up a little higher. I'd prefer something like that for short on atom personally. You might not get it, but here, if I was to short, I would put my stop loss right above this high and just trade it as a scalp, because we're reclaiming these lows. I know people are telling Lazar says he's long on Bitcoin at 23188, and people are saying to close it. This is what I'd recommend. I actually don't tell people what to do with their positions, because is there anything wrong with trading a breakout? Not really. As long as you're using risk management and you understand the setup and you want to trade a breakout, price does break out. It's a style of trading. Most people just do it wrong. As long as he has invalidation, risk management, he has an idea, he has targets, I think it's perfectly fine. I have a video on risk management on my YouTube, and there's a really famous trader who's made millions and millions of dollars with a 30% win rate trading breakouts. And the secret is to use really tight risk management, understanding that 70% of your trades will fail, but as long as they're structured properly, the reward outweighs the risk, even if you lose 70% of the time. So my advice to you, I forget your name, Lazar, is as long as you have a plan and risk management and you know where you get out if you're wrong, just trade your plan. Personally, I would not be opening along here, but you're actually long from lower, 23188. So one thing I would maybe consider, if it was me, is maybe I would just take some profits, put my stop loss to entry, and let the trade play out. I've never traded on KuCoin. I've heard that you can't put your stop loss to entry or like above entry. Is that true? I don't know. That sounds crazy to me. Like you can't. That's what I saw someone say. Someone asking if a parallel channel is a paid indicator. No, it's just a drawing tool. So it's over here. You draw it. Pretty much everything I do is manual charting. Like I'll have people ask me, like I'll do a tweet with like I did a tweet down here. I was in this long. I did a tweet just saying, the chart was clean. I just said, does it make sense? Just delete all this. As price was moving up, I said, does it make sense that this is the top? Or is price driving somewhere? And to me, it makes sense that it's driving to the liquidity above these highs. And, obviously people had different reactions to that opinion. But someone asked me, how do I get these red box? What indicator is the red boxes? And I think a lot of people think that everything's an indicator. These are just my ideas, right? I'm just saying, hey, there's liquidity up here. So most of the things you see on my chart are just things I'm drawing on the chart, forming my own ideas, and not an indicator that is generating something for me. Someone's asking if I use limit orders or markets for stop loss. A stop loss is always a market order. There's no way to, well, that's kind of not true. You can use a conditional order. They're kind of dangerous because they might not trigger. But so when you understand what the difference between a market order and a limit order is, first, a limit order can't move price, right? Price gets bidded up and down by market orders. Limit orders just sit there. Now, if this is a limit sell, then it can get filled, but you can't have a limit stop loss sell on a long, right? Because price needs to move up into this. So anyways, you can't limit a sell order, even I'm confused even talking about this, below price. So this would be a market stop loss and execute as a market order. But the only way that you can do a limit stop loss is you put a conditional trigger and you say if price moves to here, then I want to conditionally open a limit order of sell right above it. But the only way that stop will trigger as a limit order is if price moves below and comes back and hits it. And the danger of that is your stop loss, quote unquote, may not get filled. So there is a strategy that some traders use, and I've used it myself. It's a little more advanced, where you have a conditional stop loss as a soft stop. So you basically set something up like, hey, if we swing failure this low, I'm going to set a conditional stop that gets triggered, and then if we come back up and hit it, then whatever. And then I have my hard stop, which is my market order hard stop loss, separately. So in this case, it would be above. But so you can run a conditional as a soft, and then a deeper hard stop loss as well. And the point of that would be to like predict some potential reversal type or fake out type price action where you aren't getting stopped out by a fake out unless, and it's more likely you're only getting stopped out if there's a real reversal. But I wouldn't recommend using conditional or conditional orders as stop losses unless you really know what you're doing, because if you set them up wrong and that's your only stop loss, they cannot trigger and you can get wrecked. I think one thing that really needs to be examined in this kind of the trading sphere is a lot of people don't know what they don't know, and there's a lot of questionable information out there, especially on Twitter. And so, yeah, I'd recommend just if you don't have any trading experience or you're trading and it's not going very well, to stop trading with real money and focus on learning systems, learning risk management. You can trade. Let's just say that you have $10,000 you want to trade, but while you're learning, maybe you just trade with $10 or $100, and you start learning these concepts. And what maybe after a certain amount of time, a certain series of trades, you've begun to understand how to structure trades, and you've become profitable. Then you might consider trading with real money, because I'm telling you, or what is substantial money to you, because I'm telling you as a beginner, you will just lose money. I would say there's a 100% chance. Like, you might open a trade and win, even your first few trades, but over time, if you keep trading and you don't know what you're doing, you're going to lose money. It's almost a certainty. And, people confuse this. Comes from Mark Douglas. He's one of the best trading coaches in the world. He's no longer alive. But he would say this: how much skill does it take to put on a winning trade? What skills does it take to win, to even a massive winning trade? And the answer is no skill. There's no skill required to put in a massive trade. All you have to do is click a button. You could have massive size, massive risk, and price could just go in your favor. You open the biggest short of your life, and you're in a massive winning trade. That's the confusing thing about trading, is now you all of a sudden think you're this great trader. But what does it take to consistently win in the market? Over the series of, say, 100 trades, a lot of skills. Really advanced skills. Very few people can actually do it. And so understanding that difference, where you might hear stories of someone that say, oh yeah, I read about this altcoin from blah, blah, blah boy, and I bought it and it 100x'd. And then you start thinking that that's a realistic expectation, when we just know from our experience in the world that most people don't turn $1,000 into $10 million, and it's not a common thing. And that's probably more akin to just reading a story about someone who won the lottery, right? You have millions and millions and millions of people with different stories, and of course you're going to hear about the story that the one person who turned $1,000 into 10 million, and be sold that story as if that's common, but that's like thinking it's common to win the lottery. Trading is a game of probabilities. If you manage your risk properly and you accept that you don't know the outcome of a trade or any position, and there's no way to know, you can put on high probability positions with good risk reward and just continually have opportunities to take money out of the market, and accept your stop loss, losing a trade, That is referred to as the cost of doing business. You have to accept on this vet trade, this loss is accepted. I don't assume this trade will win. I don't assume one way or the other which price is going to go, which way price is going to go. For me, if this happens, that's perfectly fine. That's part of my trading plan. If this happens, that's perfectly fine. That's part of my trading plan. My stop loss is part of my trading plan. I'll just point this out really quick. People don't treat stop losses as something that they're deciding. It's you deciding how much you're willing to pay to find out if this trade is going to work. You get to determine that. You can't lose any more money unless there's like a massive liquidation and your stop gets run through, but that's rare. You get to decide how much money you're willing to lose. You have complete control over it, and you can put it in an invalidation area. You should be perfectly fine with your stop loss getting hit because that's your decision. People think the goal of a stop loss is not to get hit, and so they keep trying to move it so they don't take a loss. The goal of a stop loss is to get you out of a position when your idea doesn't work. So for me, like if I've opened a short, which I did, I shorted this. I'm going to just show a good example of a stop loss that is working for me. I shorted this, swing failure. We got a nice little move. I shorted the retest. Now when this level gets burst through, I decided to cut my shorts, and even this I didn't. I'm just stop opening shorts and I'm expecting higher. Whether I open a short or not doesn't matter. The point is, I'm not trying to stop this stop loss from getting hit. I want to get out of this position and I want to read the market correctly and saying, hey, if we aren't rejecting here, my opinion is we're going higher. And so I'm cutting my position. And that's not a loss to me. That's a good decision. I had an idea, I cut my trade, and price went higher. Great, I'm glad to be out of that. Now, what you don't want, but you can't always control, is that you cut your position, and then right when you cut it, price reverses. That's kind of a bad stop loss in a sense. A good stop loss is a stop loss that triggers when price continues against you, and you got out good, in a sense. That's how I look at it. A bad stop loss is where you just get stopped out and then price reverses. Then your stop loss was maybe not planned very well. And sometimes it's just bad luck. But typically your goal is to have as tight of invalidation as possible. Like here on VET, my assumption is that if price comes up through here, I kind of want to be out of the trade. I can always re-enter if we have some more weakness. And ideally, if I'm getting stopped out, it's because price is just going to carry on higher. If I get stopped out and price does that, good stop loss. If I get wicked out and then price dumps right after and I don't reopen a position on a reaction, that's kind of a bad stop loss, but I have to put it somewhere. And to me, it doesn't necessarily make sense to just keep running it up higher and higher and higher. That means my size gets smaller and smaller and smaller. The further away your stop is, the smaller your trade is to keep risk management intact. And so your goal is to find the closest invalidation that makes sense. It can't be random. And yeah, close your position if price is going against you. Just going to look at AMD real quick. I'm in this long from down here on AMD. That's a stock, not a crypto. I like this ascending channel idea. We have nice middle touches. a really nice golden pocket interaction from this 618 from this pivot low. I don't know. I didn't spend a ton of time on this count, but it kind of made sense to me. 1, 2, 3, 4, 5. Come back, retest these lows, sweeping the liquidity below them. So I entered long here. I have a nice move, but I am expecting a potential retracement. It's almost a 40% move off here. They just had earnings that came in positive. I don't know. I'm just seeing if I want to close some of my position or not, take some profits. Where is this? Let's see something. So we have the new 4-hour candle open, which again can be an important time for a pivot or an impulse. So, it'd be nice if it's a pivot high getting put in here during this 4-hour and we see a reversal. One thing to look for is a potential impulse into the first 30 minutes of this candle and then a pivot. Oftentimes there is an impulse after this opens. And I think one of the reasons is a lot of people are looking for the 4-hour close above type narratives. So whatever they're trading, oh, the 4-hour close above this level, the 4-hour close bullish. Then they long it, they get wrecked, and price reverses. Somebody asking me if which platform I trade stocks. Mostly Interactive Brokers. I put pretty big size on this AMD trade. I've taken 2 entries on AMD. I entered down here off this. There was a key idea here, and I entered on the retracement. At the 786. Took some profits. Got stopped at entry and re-entered down here. Just think this is a nice high time frame potential low here. We can see I'll use the same analysis on stocks as I do on crypto. Hey, I'll be back in 3 or 4 minutes. Can grab some more coffee, take a leak. Be right back. All right, I'm back. So far, the 4-hour candle is going down. It is nice. Um, I mean, I always say it's funny because, like I say, I accept the risk of my positions. I'm happy to win or lose. But it never is fun to share ideas or, you know, try, just like ideas of resistance and rejection, whatever it is. And obviously we could just pump straight up. But it's never fun to do that publicly, and understanding that the vast majority of people have no context for what trading is all about. And so they just see like, you know, you're wrecked. You thought price would reject and ape went up 80%. It's like, well, my stop was here. I'm not wrecked. I had a 1% stop loss. And it was just a trade idea that didn't work. And some people are new, you know, they didn't see the 20 win streak. They just saw the one loss. So yeah, I mean, as far as kind of the concept of this stream with the 1 minute charting, let's try to do that here. Right now we have heavy volume coming in. Now, the only context I'd give here is like, yes, we have a local range on the 1 minute chart here on, let's just say, 8. And if it was not at high time frame resistance and a high time frame rejection, I might be more interested in some scalp ideas, like maybe sweeping this low. Let's just see. We'll see what kind of reaction we get. Let's look at some local analysis. You could possibly be interested in some low time frame ideas and reversals. It's just sketchy to long after a major rejection. It's not so major on Bitcoin, but there is certainly an idea here with bearish absorption. But on these alts, a lot of these alts are at high time frame resistance. So scalping longs here on these pullbacks might not end so well. I wouldn't necessarily recommend a channel like this. I mean, you could, I mean, it's not the worst, but one thing you can do too is if you kind of just have these low time frame weird ideas, you can copy the trend angle, and like here you can see is price moving on that trend angle. This is kind of a more advanced concept, but is this now what we can see is, you know, this just seems like a random pivot to pull a channel from, but as you start to define price by this trend angle, you can see it's not maybe so random, as price is well defined by this angle. And so now, you know, not really a key fib here locally. Maybe it's a 382 from here. One thing I also like to do is pull my fibs from where I start my channels. So looking on a low time frame here on Gala, I'm just using this as an example. You have this consolidation over the last several hours. You're sweeping the lows into this ascending channel idea. Could this be a scalp long, reclaiming these lows? Certainly. This would be something that could be traded literally probably like this. And this would be a scalp setup where you have a stop loss 0.3% away. You're trading this as if it's just like a major idea. Your 6-to-1 risk reward. You have your technical ideas here, a sweep of the lows, an ascending line trend. The only problem is we're coming on off some big rejection. So it's like, in that context, what's the win rate of a trade like this? Probably, I don't know. Maybe it's 50-50. Maybe it's a little worse. But if you have 6-to-1 risk reward here, that means you could take it, you could lose it half the time and still make money trading it. But let's just admit that I am a boss at analysis. Just kidding. But you know, it's like ideas like this I don't think are easy to spot. Where you have this really well-defined angle in this price action. It's just understanding that this trend is actually playing out across these highs and lows. And if you went to a fib channel, probably would find some nice fib channel levels here. Not really. Maybe if I pull it the other way. That's a little better. We have the 618, 65 acting as support. Delete. Yeah, but anyways, there are many types of analysis and you can use them in different ways. It's nice. My style is, I think what sets me, I don't know if I would say sets me apart, but I'm very good at high time frame analysis and low time frame analysis. And I have a ton of tools in my kit and I can oftentimes add a ton of ideas together. Like if I if I open up my all of my folders on Bitcoin, although some of this will overlap because I just recreated everything. Got harmonics. Go to high time frame. So what I do, obviously you never would keep a chart like this, but what I'm doing is I'm looking for harmonics. I'm looking for Elliott wave counts. I'm looking for parallel channels. I'm looking for key fibs, and then I'm looking where those ideas overlap, which is why I like this pivot high around 25,000, 25,500. There's a lot of ideas that overlap. Looking for these trend lines over the highs and lows. And so you're not necessarily trying to trade everything. You're looking for confluence. You're looking for harmonics to align with Elliott wave ideas, to align with trend lines, to align with parallel channels, key fibs, fib extensions, fib time. And all of that comes together to set up maybe a nice trade with that is likely to get you into a profitable position. Seems like a lot of work, and it is. And then multiply that by doing it on 20 different coins and some stocks and keeping track of it all. But eventually you do get proficient at it, right? We're still a lot of work, but you kind of, it doesn't take you as long to spot an idea. You can spot them pretty quick, put them together. I'm not longing this on Gala, by the way. I'm just pointing out a low time frame idea, but like I said, would you really take it coming off this, all these major high time frame levels, Bitcoin rejecting? I don't know. I don't think I would. I'm happy to be in shorts. There's always the possibility, and it's unfortunate when it happens, that the one thing that you're shorting is the one thing that doesn't go down. I'm sure everybody's had that experience. It doesn't even happen to me sometimes. The thing is, I'm typically shorting into the thing that people aren't shorting, the thing that looks the strongest. Not right when it becomes strong, but I'm looking for those higher time frame reversals. And I'm looking for longs on things that are drawing down.
because I trade support and resistance. And there's nothing wrong with waiting for way more weakness to short. And people say a common thing in trading is don't look for tops and bottoms. There's no way to trade tops and bottoms. Look, look for the middle. And I'm not saying that that's wrong, but I am saying that I trade tops and bottoms a lot, and I believe you can trade them consistently, and the risk reward is so good. But it's just not a style of analysis that really anyone uses. Like I don't know how else to put it. And of course, you're gonna, it's gonna look like you have pie on your face sometimes when you open a short here on vet, and then price breaks out, and people say, "Why the hell were you shorting here? Look how strong price is breaking out." It's like, yeah, it is, but this is how price always looks at the top. It's always breaking out. I mean, that's why it's the top, and your risk is defined. So it's like, I guess that's just how I would put it. That's one thing, a comment I get often when I'm opening longs or shorts is, even here on Bitcoin, wow, isn't price really bearish? Doesn't this look really weak? It's like, yes, but it always does at the lows. It always looks really bullish at the highs. So just looking at how price looks, I mean, I wasn't shorting all these pumps because I was expecting higher. So there's got to be context. You've got to be coming into key ideas. But eventually the top comes in and it usually looks pretty bullish, or the bottom comes in and it usually looks pretty bearish. Someone asking, is it reasonable to put the 8 stop loss to entry? Yeah, I mean, I don't think it would be such a bad idea. If price comes back up into these highs, is it likely that we stop out? But I think generally, if you're thinking about putting your stop to entry, you should be thinking about taking profit, right? Typically, what I'd like to do with a position is get my TP in and put my stop to entry. Sometimes, like if I have to leave the chart, I'll put my stop loss to entry and I'll either just take profit where it is, or I'll set my limit and just accept that I may get stopped at entry before my TP1 gets hit. But typically I like to be around and take it, make sure I've taken it before my stop is at entry. But yeah. The other thing that's good about trading like these highs is you can oftentimes put your stop at entry and your stop will hold before the reversal and you won't get wicked out. The hard thing about entering like in here is you really can't run your stop at entry because even this is going to stop you out. And so you do have to keep your stop wide, which is fine. You can just accept that risk. It's kind of a different trading style. But if you don't have a good entry, a lot of times it doesn't make sense to put your stop at entry. Someone asking if I use volume profile or thoughts on volume in trading. Yeah, I use volume profiles. I mean, I wouldn't be surprised if we pull the volume profile across here. Let's go to a lower time frame. So you could consider, it's not a very well-defined volume profile to be fair, but you could consider this point of control as important. So, you might want to see price come back and reject from that point of control instead of claim it. The other thing is, I spend, and this is more for members, I spend the vast majority of my day, in the members group, on the charts, doing analysis, trading, and a lot of times, like even waking up at 3 in the morning to an alert, trading, being up for 3 hours when I wasn't expecting to, and things like that. A lot of times when I've put on a position, and maybe it's a swing position, I'm putting on my position, I'm setting my stop loss, and sometimes I just want to go back to doing. I have plans maybe to do something, and I just want to go do that thing. I don't want to sit and watch my position for 5 more hours, right? Because, a lot of times I have a very small window of time in my waking day to do anything else. And that might be 2 hours or 1 hour or sometimes 3 hours. And I don't get to choose when it is sometimes. So, yeah, sometimes I'll put on a position and I'll leave. And I might get an alert on my phone that I took profits. I might have alerts and take profits manually on my phone, or I might get an alert that I got stopped out. These are important times to be considering a take profit. As price comes down and we test some of these lower wicks, maybe the lows of this range, looking for any kind of sign of strength. And to me, it's usually going to be on especially high time frame ideas. Yeah, it's going to be about 30% for me that I take profit, leave 70% running. And that secures some profits. I can put my stop loss entry, and then I can just go about the rest of my day or doing whatever else I have to do. And, it's just one day at a time. Another profitable trade. If price breaks down, great. I have 70% of that position running, which is substantial. Yeah. So this would be like a low time frame setup. I gave the example, but like I said, wouldn't be interested in trading this. And that's where it comes to context. Like there might be times where you have, okay, this is getting a little crazy though. Let's just clear up this chart a little bit. There might be times where you have this consolidation and you look to trade the swing failure of this low. But the context of that would be that this isn't happening everywhere else. Everything's at high time frame resistance. Gala's already come off a major rejection. This actually front run the golden pocket at the time. I was actually going to add to my shorts here. Didn't get it. It is now the golden pocket because we made a new low. The 618 rather. So I'd add to shorts up here. But anyways, all this being said, there's really nothing. It would be opening a trade to open a trade and probably against the direction of the market. So a TP1 for me is typically 30% on a swing position. The idea being that you're trying to leave as much of your position open as possible. And on a scalp, TP1 is usually 50%. Because when you're scalping, you don't usually have 3 or 4 take profit targets. You usually have 2. And you're accepting that like, hey, I'm not expecting this to be a major level. A reversal could happen quickly. I'm trying to get in, get out, secure profits. You don't want to be taking 10% profit halfway to your scalping target. So I want to mention this as well. So I always talk about the quick take profit one. There are scenarios where you have major high time frame ideas. Let's say for me, I do apologize when I turn on all this random TA and then my chart looks like this. It's not probably that conducive to newer traders. But for me, sweeping this low into the 886 retracement is a harmonic idea. There's a lot of ideas here. I really like it. Let's just pull this across. If I get this position, the price bounces and reclaims this low for a swing failure, and I've entered here, and there's a nice reaction. Does it make sense to maybe not do a quick take profit, to accept the full risk of this position, leave that 30% running till much higher? On these high time frame ideas, that can make sense. And you just on this position, you might do that rarely, where you aren't going to do a quick take profit one. You're going to let the whole position run out higher. And maybe you take profit one at something like a bigger target, like a point of control, for a much bigger move, 10, 11%, and then you might add on a retracement. And these are like foundational positions, right? So you might be building long positions on different areas, taking profits, but maybe the lows here is like a foundational long that you're trying to build, and you're accepting the full risk of getting stopped out for the reward of carrying it higher. I think typically you're best to take profits quickly. There are circumstances where you might hold your entire position longer. But that's up to you. Sometimes it's just nice to always lock in some profits quickly. I mean, it would be kind of nice if everything just dumped here. Because I've got nice shorts. Okay, so somebody, I know people want me to look at different altcoins. I might do that. Someone wants me to go over drawing fibs. Okay, let's look at sushi. Somebody just asked for that, and I'll use that to go over how you could draw fibs, or you should draw them. Do I not even have sushi on this list? All right. Let's start on a high time frame first. So there's a couple ways you draw fibs. Always left to right for resistance. Good. Let's just turn on every relevant fib here for a second. All right. So we're, surprise, surprise, at the golden pocket on sushi. The market is very symmetrical. I mean, it is crazy. I'm just, like, when I tell people that you shouldn't care about fundamentals or news, it's because what do sushi and ape have in common? They just swing failure this identical high into the golden pocket and are rejecting. This is literally the exact same. I gotta pull it here. Also, nice rejection here on ETH. I mean, I've been pretty dialed in today, I'd say. Where is this? This is literally the exact same price action as ape. Sushi. Ape. It's identical. Everything is pretty much always behaving the same. It's not that everything's always hitting the golden pocket and swing failuring this high. It's just these key fibs are always relevant. It's probably even in a ascending channel idea. So for resistance, left to right on fibs, looks like we even have maybe an ascending channel idea here. Not quite. This looks like a perfect trend line maybe, but It's not perfect, is it? It is pretty much perfect. So again, parallel channel on sushi, high time frame fib, swing failure. And this is what I mean, like when I talk about like systemized trading and you have a trading strategy and plan, I have a plethora of setups that I look for. And it's the same thing that I shorted on, the same type of setup that I shorted on XRP, same sort of setup I shorted on Gala up here. And I'm just looking for setups that I'm familiar with, and I have quite a few of them, and I trade them on a reaction. So sushi. So anyways, that's one way to pull a fib, is left to right for resistance, looking for key fibs, 382, 50%, the golden pocket, 786, 886, all relevant. Your most important ones are typically the 382, the golden pocket, although on altcoins I think the 786 should always be considered, especially after rejections and retracements. They like the 786. You can see here, perfect rejection from the 382. So we had pulled from high to low, could have traded the 382, would have offered a nice short into a swing failure long. That's how you could have traded this, right? So you short the 382 into the range lows, swing failure, long into the golden pocket. Obviously you would be taking profits along the way. You'd also want to be aware of your absolute high fib levels, and look at that. It's the 50%. So this is what's called fib confluence. So let's delete, and delete. So you could be aware, what did I just do? You could be aware that your 50% fib is coming in right at your golden pocket. And then if you were watching this ascending channel idea, I mean, you could have shorted the top on sushi. Obviously, I can't watch everything, but oftentimes I am posting trades where I've shorted or longed the exact top or bottom. And I actually had somebody comment that the reason they don't like me is because I always am showing I have shorts from the top and longs from the bottom, and they think it's suspicious. But these are the types of things I'm looking for, and they give you shorts from the top and longs from the bottom. And it's not that they always work, but I mean, they work a lot. And so you end up with great positions. So now let's keep building on this idea. Wow, look at this confluence. You have this descending trend line, 50%, the golden pocket, the local swing failure, the ascending channel locally. Looking pretty sweet. Of course, I'm already in shorts. And I don't like to short 50 altcoins at once, because if one of them goes against me, usually means Bitcoin's pumping and everything's going to go against me. You got to choose your battles. Now we could start looking at some support fibs. This is probably a 786. You can kind of just eyeball it. Ooh, we front ran it. So you had the local swing failure, but no 786 here. Probably the more important fib to pull here locally would just be from this pivot low to this pivot high. You want the 382 on there. You want the 6.5. So that's how you'd pull support. Left to right, low to high. The idea of a fib retracement is you're measuring price action and you're looking for 61. You're looking for a percentage retracement. I noticed tons of people pull them backwards. So this makes sense, right? This is a 38.2% retracement of this low to this high. It wouldn't make sense if you pulled it like this, because then this would be, now I'm going to go over this in a second, but it would, like this would say this is a 78.6 retracement of this low to this high. Clearly it's not, right? 78.6 would be 78.6% of this move. This isn't. Now, the reason the 382 and the 618 are so important is they're inverses of each other. So the 382 and the 618 from the Fibonacci sequence are the same ratio from 1 to 0 and 0 to 1. So they're both really important retracements, and Elliott waves concepts are structured around these retracements. So they're both really important to watch. They give you some ideas for the strength of a trend. 382 retracement bounces are much stronger indicators of a strong trend. I'll just quickly go over some examples of that on Bitcoin here. When we had this big initiated short squeeze, this whole trend up was defined by the 382 retracement. So I'm just going to show you. So this is a clue early on. Hey, 382, 382, although we front run the 382 here, I didn't actually think we did front run it. I thought it was like a perfect touch, but maybe I have it misremembered. But anyways, so you would keep pulling your new high. So you make a new high, 382. And if when you're getting these strong bounces off of 382, this is telling you that a strong trend might be starting. You want to be aware of that. Obviously, we had some more 382 bounces, which I remember this. This was a long time ago. It was 2021. But we had this, but this was also the golden pocket from this pivot low. So we came up, we had this big dump, wicked right into the golden pocket, wicked back up, ultimately had a bit of a deeper retracement. But anyways, so these 382 retracements, if you have an inkling that a strong reversal might be happening, you might even trade those more aggressively because they're an indicator that a strong trend is starting. Same thing with price action to the downside. This trend was being defined by the 382. You have this would have been your retracement, 382, perfect rejection. This is telling you, ooh, maybe a strong downtrend is starting. You want to be aware of these 382 retracements on the way down. This would have been your retracement, wicking through it a little bit. I know my chart's getting messy here, but again, perfect 382 from the last pivot. And yeah, just these shouldn't be ignored because this is a clue that you're in a strong downtrend. This is kind of getting into some more advanced fib theory, I guess you could call it. So one of my high time frame targets for Bitcoin, just to get into that quickly, is still a 382 retracement from. I'm actually going to delete a lot of these fibs so we aren't getting confused here. High to low. 382 comes in around 37,000. So it would bring us back into this region of the chart. Now, the reason this is important is because this is still a key fib retracement for a continued downtrend. So this is a high time frame target and something to be aware of. And we could go back to, I'd have to switch to a Coinbase chart, but even in previous bear markets, the 382 was a really relevant correction. All right, so we have a swing failure on APE, and I'm just going to take profits. We have a swing failure even forming on VET, so I'm going to take profits off my shorts. And set my stop to entry. Now, it's not that I think that price is going to reverse here. I don't know what's going to happen. I actually think it's likely we just carry on down. But I have 70% of this position running still. It's a nice move, 2.3%. You have a reason to take profits here, right? Because you've wicked through this low. Now we could You can always add back to your position. If we get a retracement, maybe a local 786, well, you have the option to add back if you want. You can add back anytime. And so this is the great thing about taking profits quickly on like a move like this, is you might not have the opportunity to take profits as price comes right back up to your entry. So you have the opportunity now, and now you have options. You can add back anytime you want, and or you cannot, and just let your stop set at entry, and you're in a winning position. But people, I think, don't like taking profits because they're scared that price is gonna keep dropping, and they took profits too early, or they don't like. Most people don't like making active decisions, and so they don't like the idea of like, I have to take profits and then decide if I add. What if I make the wrong decision? I think just simplify it. You've locked in profits. You know, if you don't want to make another decision, set your stop at entry and just let the trade play out. If price keeps dumping, you have a position. Did you make a bad decision? I don't know. I don't think so. If you're unsure, if you're unsure, I think the idea is typically to take profits. I think the stream will automatically be recorded. So I'm hoping. It's not like Ape has flipped any resistance here. I mean, we're still rejecting. This is more just a reaction. And it's probably, I mean, we have horizontal levels here that we could just reject from. This is an important horizontal point of control. But the problem with waiting to take profits is you can just get in this situation where suddenly you're not even making anything off this trade once fees are covered. So you make a decision that you're either going to make it a profitable trade or hold it longer. But the reward of holding it longer is, yeah, you keep 30% of your position running, 30% more, at the risk of just being in an awkward position where you can't do anything with this position. Someone's saying still streaming, damn. Yeah, my plan was to stream all day. I don't know if that's going to pan out, but giving people the opportunity to join, I thought maybe I might for a while leave the stream running and just mute it, and if I have to take a little break, just do that without shutting down the stream, just see how I feel. You know, for me anyways, I'm not necessarily like this enigmatic personality, so I don't really know how me interacting on a stream for countless hours will go. But it can be kind of tiring to just do endless analysis hour after hour after hour after hour. So I don't really know. Yeah, it could be another hour, could be another 3 hours. If something really interesting happens, I'm just trying to provide value and try something new. So if I feel like I'm doing that and I have the capacity, I'll carry on. Someone's saying, do I use dual monitors or one big monitor? I have multiple monitors and multiple computers. Well, I have 2 computers. I have a nice laptop. It's hooked to monitors. I have another desktop with 2 monitors. I don't think you need that for trading. I just have the luxury, I guess. I do think 2 monitors is nice. I think it's nice to have, even like you can split your screen in 2. And so you could have one where you have a chart open. Maybe you do have like coin analyze or something for looking at CVD and things like that. And then you have your actual exchange open on a different screen you're trading. For me, it's pretty imperative because when I'm trading, screenshotting, giving live updates. I have to update multiple channels, and it's just there's a lot going on. Some people would say like, oh, you know, the, people are looking for 100 X's every day, right? It's like when you're a trader, you get an entry, you get a 2-3% move, you take profits. It could turn into a bigger position. That's great. You have to understand that, like, if your perception of like crypto and trading and buying and shorting is that you should be making 100% a day, you'd be a trillionaire in a couple weeks. Um, it's just not the reality. You're just looking to consistently win. And some people might say, is a 3%, well, it's not worth it. You only got a 3% move. I mean, it's an average investment, you're struggling to make 5% per year, right? This is kind of what trading is, accepting that it's a good day if you capture 2 or 3% of profit. If you get a 15% move on a position, great. If you get a 200% move, great. But that's probably going to happen rarely, because if you just look at the charts, things aren't moving 200% every day, right? I mean, if you're scalping, you could maybe pull off some crazy day. But yeah. The thing to understand is that once you've opened a position and taken profits off of it for that day, especially meaningful profits, I'd say like 1 to 3% in a day is a meaningful day. You've beaten 95% of the market that day just by being profitable, and then you just try to do it again the next day. Keep in mind, I have other things to do too. Like I probably won't stream all day every day. I mean, I can tell you I certainly won't. I have a lot of work to do on just the members like website, and reorganizing all the content, and getting some help with that, and rebuilding a bunch of stuff. And there's a lot of just things I have to do that aren't even trading related. Which this month I am going to. That's going to be a big focus of mine. I think the Discord's great. Could probably have quite a few channels removed. It's a little cluttered in there. But I'd like to have things just more organized on the website, and there's a few features I want to add and things like that. Which is all a journey. I think what most people enjoy is the live updates. I think that's live streams, obviously, I think people like, and video updates. The good thing is, like, I can film a video update and get it downloaded within 10 minutes. So typically it remains relevant even if it's a low time frame update. Someone asking, do I take Bitcoin into consideration, or volume into consideration? Absolutely. It doesn't make sense not to, right? Because volume is what moves price. I mean, buying and selling orders, liquidity, all volume is. Without volume, it's kind of hard to understand what's actually happening. And to me, without looking at like things like open interest and volume delta, it's even harder, because you need to know what is this volume representing? Are longs opening or shorts opening? Are there big traders absorbing these moves? I don't really have a feeling about the Bitcoin halvening theory. I think fundamentally it makes sense that the halvening is important, but it's just, for me, there's no reason not to just defer to technical ideas. The Yeah, I just want to glance over. Did I get rid of? Oh no, it's right here. Um, but you're saying, to be honest, I love those local updates and key levels to look for very informational in the members group. Yeah, so I will say they aren't for everyone, and I'd say, I mean, I have probably 95% really positive feedback, but occasionally I get people who are like mad that I give so many updates. Um, like I don't care about, you know, I want like because what people want, some people, they want they just want every update to be like the bottom is in, price is going up 80% from here, go all in. And it's like, well, that's not. I mean, you're not going to have high time frame setups every day, and I could just do no updates, of course. Um, but not everyone's interested in like the progression of price action. But the purpose of all those updates is to actually cement kind of an understanding of how price moves and interacts with key levels, so you can start looking for those things on your own. I mean, I'm not trying to give signals. I'm trying to build a foundational understanding of how the market moves. And yes, I share my trade ideas and I say when I take an entry, but it's not a signal. It's just, hey, I'm shorting here because of this, 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 and this. If you want to learn more about this, you can refer to this video. And I'm just trying to kind of put those concepts into practice. Yeah, I think Lazar's saying, for me, it's hard to navigate with you. I don't know if you're a member or not, but I would say it's kind of jumping in. If you're new to all these concepts, it's jumping in with both feet into the deep end. I mean, the purpose of, like, that's why I think it's important to go through the learning materials to understand the concepts. I mean, you're just not going to just jump in and within the first 10 minutes understand everything I'm talking about. And the problem is I can't actually teach every concept every time I give an update, because then I would have to, if I'm talking about a concept, I'd have to then take 30 minutes to go through what that concept means when I have videos describing those concepts and explaining them. Um, yeah. I mean, I've had somebody, I mean, I don't mind talking about like negative feedback. I'm not saying there's not a point like that to be made, but you know, somebody said they don't want all these updates and they only want 4-hour chart updates, whatever that means to them. Like, for example, this was a long I took. They're saying they couldn't take that trade, which I'm not saying they should. Don't take a trade, because they didn't have the confidence and they wanted to wait, or sorry, this long for a 4-hour chart confirmation. And so I just said, well, if that's not how I trade, I'm trading the level and the reaction. I'm like, but if you want to wait for a 4-hour chart, put it to the 4-hour chart. You can enter on a 4-hour close or retracement, whatever you want to do. And then they were just saying they don't understand my trading and blah, blah. I'm like, well, what don't you understand? They gave me an example. I'm like, well, watch this video. It goes through this concept. And their response was, don't insult me. And I said, okay, I don't know what you mean. And they're like, and they said they were an experienced trader. They've been trading since 2012 and in crypto since 2013. They don't need my educational videos. They just don't understand why I'm taking a position, and so they can't take it. I'm like, well, and they say they understand support and resistance. They don't need a video on it. I'm like, well, if you understand it, then why didn't you take the trade? You're telling me you're mad because you didn't understand this position, so you didn't take it. And I'm explaining it to you, and you're saying you don't need me to explain it to you. And it's like, okay, well, I don't know what to do for you then. I mean, this is how I trade. You're telling me you want me to trade how you trade. You're saying, I want you to give me an update. If there's a 4-hour close, it's like, well, that's how you trade. I mean, if you want that, then just do that. I'm not saying you have to trade like I do. I'm not trying to offend you, but yeah, hopefully that makes sense.
Yeah. So Lazar saying it's hard to navigate um, the Discord. I don't know if you mean the channels are hard to navigate, because I would say, like, especially if you're new to Discord, I don't like all the channels. There was like an idea of having the Discord be more like multi-purpose, covering lots of things, and a bunch of channels got added, and I actually like fewer channels. If you're saying the updates themselves are hard to follow, typically what my updates look like would be, where is vet? It'd be something like this: vet swing failuring this high. If we close below it or move below it, that's my short trigger. So I'll do an update showing that, and then an update when price goes down. I say I enter short. This is my validation. I might say I took profits, stop loss to entry. But so that, I just do a kind of a progressive update on the chart, looking for a swing failure, looking for a tap of this key level, this channel, whatever it is. But yeah, the problem with the Discord itself is there's so many channels in there. I actually removed about 10 channels, and there's still too many. And it's because there was a concept that was being played with of having other traders in there, all with their own channels, and some wanted NFT things and some wanted other things. It didn't work out, and a lot of those channels stayed in there, where initially I just wanted just a handful of channels. Channels for members to interact with, different topics, and some update channels. But now there's like 30. I mean, in tier 1, if you're only tier 2, you don't see all the other channels. If you're only a public member, you don't see all the tier 1, tier 2 channels. But if you're tier 1, you see like every channel, and I think it's just a lot. Yeah, Kavizi, he's been a member for a while. He said, before I got into your group, I didn't know about any of this. Now I know exactly what you're talking about every time, and the mindset. That's the thing. Like to me, I wouldn't even need an update to see, like, if somebody just shared this chart with me, I'm like, oh, 50% golden pocket, ascending, descending. I wouldn't need to even, this is a signal to me. I mean, if somebody gave me this chart and price was moving up to here, I'd be like, oh damn, I'm gonna short that. So if you don't have any idea what any of this means, doesn't mean anything to you, and it takes some time to understand that. And I usually explain with every chart, coming to this trend line ascending, if we move below this, I'm gonna short. I used to I mean, it's even little things. I used to give updates saying, like, coming into heavy resistance, looking for a swing failure for a position. And then we get it, and I would do an update saying I entered a position. But then I would get DMs saying, did you enter long or short? And so, like, even just something as simple to me as someone not real understanding if, when I say I entered, if this is a long or short, makes me realize they don't have any clue what any of this means, or what resistance is, or that I have to specify that I entered short. Well, that's kind of, and my goal isn't to obfuscate. Yeah, the point of the analysis. My goal is to help people understand and learn, but I don't want to encourage people to trade ideas they don't understand. It's those, trading a concept is, it's okay to trade someone else's analysis if you understand it. I mean, you can't analyze anything. Sometimes I see analysis, even members post in the Discord. I wasn't watching that. I like it, and I might trade it. But it's not a signal. It's just I'm trading an idea I understand. This is not a signal. This is an idea of resistance. If you understand it, you can trade it. If you don't understand it, how are you going to trade it? Look at that. Another bounce off the VWAP in the middle of this ascending channel.
Lots of longs squeezed out or stopped out here. I wonder if Crypto Poseidon's watching. I just got a notification. He said, "Why, Lucky Trader? Why are you smarter than me?" I'm not smarter than you. We're the same smartness. I really like Crypto Poseidon. It's been really friendly, and that's the thing. Like, I don't know. There's a lot of different traders that have different trading styles, different perspectives. I really don't care if somebody has a different perspective on the market or different analysis than me. I mean, I'm not claiming to be an authority on where price will go. I have no idea. But it is nice when people don't take it. I wouldn't even say that me and Crypto Poseidon necessarily have different perspectives that often. But sometimes it's like people take it personally when you have an idea that is different than theirs. That's actually what I liked about Plan C. We spoke in the DMs over the last like 6-7 months, and he had a lot of his bullish on-chain data, which I'm fine with. I mean, you can have bullish perspectives, and even here I was saying like this is probably a pivot high. This was a big short idea I took at 48K, so I'm expecting these lows to be swept because he was saying like this shouldn't be taken. And when we were talking, like he was like, "That's really interesting. I want to look more at that." He wasn't offended by the fact that I had a completely different perspective than him. And he was like, that could make a lot of sense if price came down and took this liquidity. He has his style of analysis with on-chain data that he's looking at, and he's saying, "Hey, I think this is important." And he was even asking me like what my thought was on like the bullish market structure here. He's like, "Well, we're making higher lows, higher highs." I'm like, "Well, before a reversal comes, it is bullish market structure. I mean, if a pivot high comes in, it typically is creating a higher high, and then you have a rejection. It's only bullish until it's not. And if you're trading the resistance, typically you're going to be making a higher high before a reversal." But anyways, it's just things like that where just when I'm talking to someone and they don't seem to take their analysis personally, I really like that. But yeah, there was a thought that was in my head there for a second, but it just escaped me. This could be. I mean, we're getting some retests here. We'll see. Still very possible, just the high is in on some of these, and we're going to get a retracement and then a further rejection. We'll find out. I have a nice position if that's the case, if the high's in, and a small winner if not. Now, on this vet position, my stop is above this high. Sometimes it doesn't make sense to put your stop right at entry, because does it really make sense to stop out a short here? Not really. I mean, I'm kind of fine with this just being a break-even trade. I'm not really too, concerned about this difference between getting stopped here or here, right? I can always re-enter if I see an opportunity. But what I wouldn't want to do is have my stop, like if we just continue like a bearish local structure here, I don't really want my stop above this high. I mean, really, I don't even want it. I mean, sorry, below this high. I really don't even want it below this high, but I can always re-enter. The ape stop is a lot better because it's way up here. It's a much better, cleaner entry. I wouldn't say this is not clean, it's just we're still so close to the entry. And I'm not going to call this person out by name, but I've had weird interactions with people where, like somebody, I think it was down here, they were, I think, bullish here, and they were showing me analysis and sending me all this different stuff from order books, and that they thought this was the bottom. I said, I'm kind of bullish for taking the range highs, but I think it's likely we come down into the lows, into this 18K region first. And he got kind of mad at me. Like, honestly, he's like, you clearly have no respect for me and all this stuff. And I get it, whatever, but to me, that's just taking analysis personally. I'm like, I mean, if you think the bottom's in, that's fine. Just put on a position, use risk management. I think lower is likely. I might be wrong. It's not personal. You know, it's just my opinion. Somebody's saying, how do you pinpoint, where did I see that question? How do you pinpoint the time you expect price to hit somewhere in the future? Probably the best way is fib interaction with trend lines and parallel channels. So for example, if I had been so brilliant, I wasn't quite when I came up with this harmonic, but I came up with a harmonic idea. Let's go to the 4 hour. Like this, back here. So I came up with the idea and I actually caught every pivot. I had the timing kind of wrong, but you know, if I initially, but as price action formed, I realized, I mean, if you had timed it with this ascending channel, you could have pretty much got the day that price would have come into this target. So an ascending channel with a key fib, and the key fib here was the 786, the 382. There's a few fibs here for this harmonic idea. I mean, that literally could have given you the day that you hit that high, like over a month in advance. So things like that are quite powerful. I guess there's some really good examples of that on Phantom, where I did kind of have the day because I drew out the price action ahead of time that I was looking for. A, B, C, D, E, F, G. I'll just, oh no, I've got all my nonsense on. Quite bullish on Phantom. I wouldn't be longing here or anything, but I'll show this example because it's really powerful. So you have your ascending channel, descending channel, whatever it might be. Right here. This was a really powerful channel idea on Phantom. And what you could do is, let's pull from this pivot high, start of the channel, just came in here. If you were to say that you're expecting a golden pocket reaction, like I think when we bounced off here, like the price action I drew was literally waiting for a short at this golden pocket, and this was well advanced, and as price was grinding up, people were asking me if I was shorting. I was saying nope, I'm waiting for this. And so you end up getting that rejection on the day, and it's not that you necessarily can predict or time it or whatever, but you just know, man, if price is drawn towards key fibs and it's drawn towards channel touches and you have this interaction, maybe
this is where you get the touch, and you can kind of time it that way. So I'm always looking for key ideas where you're saying, maybe we get a golden pocket retracement. We do have an ascending channel idea here. Maybe it makes sense. Whatever price does, that it comes in here. If it does, it'll be an interesting time to look for a position. So that's generally how you can use channels to time entries or time levels in a sense. Because if you think about what a parallel channel does, or a trend line, is you have two axes on your chart. You have the price axes and the time axes, horizontal and vertical. And a channel moves through both. It moves through price and time. And that's why they're so powerful. And I think algos are probably forming channels. Maybe there's some human psychology thing that does it. But if you think about it, you can't set a limit order on a channel because the price is always moving and limit orders get set on horizontals. So there needs to be something moving with the channel, like holding price up on a channel. And it makes sense to me that algos could do that quite easily. It's kind of hard for humans to hold up, to plan limit order entries on channels. You could do it with something like this, with an intersection between a horizontal and a channel. But I've gone through this before, but the way I like to set alerts on channels is you put array front running the channel, and you right click it and you turn it into an alert. And you can even name it, so if it pops up on your phone, it says, bottom of ascending channel. So here's an example of 8 dumps. Am I sad that I took profits? Not at all. It's totally fine. Vet is still maintaining this downtrend. And I hope that makes sense that, you wouldn't necessarily want, if your entry was here, you wouldn't really want your stop loss there. I mean, take the extra little bit of risk and put your stop loss above the structure, because your entry is sort of an arbitrary stop loss in some cases. If you get a great entry, like this ape trade, is quite safe in the case of a breakdown. And you probably want to stop it out if price comes all the way back up to here, because you can always re-enter. Whew. I wonder if I should relink this live stream. Maybe I'll reshare it on Twitter as well. Excuse the cough. Just gonna check. Oh, I just saw Crypto Poseidon's Twitter response here. Somebody said he linked my live stream. Thank you for that. I'll comment on that. He linked my live stream and somebody says, sounds smarter than you, no offense, will leave a subscribe. And then he said, hey, why are you smarter than me? Twitter is funny. Someone's saying, when you pull a fib from low to high versus high to low, I get confused on which way to use for a long idea or short idea. Okay, first, the important thing to remember, it's always left to right, no matter what. High to low to give you your resistance fibs, low to high to give you your support fibs. These charts are getting crazy, man. I have had
Um, yeah, someone's saying you deserve more followers, too much alpha. I mean, I think generally Twitter is a pretty competitive marketplace for ideas, and there's a lot of people. Sorry, I'm just going to respond to a message. There's a lot of people that you can follow. I mean, and typically the most appealing content isn't the best. Like I think there's some really good analysts that have lots of followers. I think there's a lot of bad ones that do. But I don't think my content is necessarily tailored for the masses. Most of the people that end up at my channel are people who have kind of gone through the grinder of all the nonsense on Twitter, stumble across me, and are more interested in some of this technical stuff. But anyways, I think generally I've been doing Twitter basically for this year, and generally growing kind of quickly. I have gotten some advice that's probably great advice, and just in case they don't want me to say that they gave it to me, I won't. But to clean up my charts, and I might understand all the levels I'm talking about and the ideas and whatever, but you know, just putting clean levels, you don't necessarily have to explain what every level is. And even like just cleaning up the color schemes and stuff, it's going to just be more appealing to people. And then you can, from there, go into explaining stuff more in depth with kind of specialized content for the people who are interested. And I think maybe that's not a bad idea. It kind of makes it accessible while still providing the depth and all that stuff. But I think generally, yeah, I mean, generally, somebody asks what my day looks like. I mean, it looks different every day. Like for example, today I didn't get out of bed for the New York Open. But usually, what happens is I wake up. I'm usually at my computer within 5 minutes of waking up, just reviewing things, which is usually approximately 30 minutes before the New York Open. I try to make some coffee. I sit at my computer, and I'm typically trading the New York Open, so I'm doing updates in the Discord group, answering questions. If key ideas are hit, do Twitter posts on stuff I've been talking about. And sometimes that can be for like the first 3 or 4 hours of the day. And then I kind of take a little breather, drink some more coffee, maybe eat some food. Anyways, I'm pretty much at my computer with very little breaks all the way through close the daily candle. And it's not uncommon for me to turn in around 1 a.m. or midnight my time. And sometimes I'm up till 2 or 3. Then I'm up again 4 or 5 hours later for the New York Open. And sometimes I wake up in the middle of the night because an alert went off and I skipped the New York Open. Like today, I woke up, I looked at the charts, and we'd put in this pivot high right before the New York Open, I think an hour and a half before. And the New York Open was here. And I was just like, I don't really care. Like, if we were up here at the New York Open, I'd be more interested. And so I just decided to actually went back to sleep for a couple hours because I knew I had to do this live stream and I didn't want to be on 2 hours of sleep. So that's what today looks like. But my schedule is sort of dictated by the charts to an extent. I think that's one thing too. Like, I understand the value that people get from like constant updates in just the fact that they would like to be on the charts all day, but maybe they have a job or they're busy and they just want relevant updates.
without having to sit and be on the charts all day, which I am. Just reading some comments here. Yeah, someone's saying if I was a moon boy, I'd have more followers. People don't like to listen to the price is going to dump. It's not even that. I think that's part of it. But whether you're like saying price is going to dump or price is going to pump, people don't like updates that say, we're at resistance. I'm going to open short. My invalidation's here. There's still targets up above, targets down below. They want an update that says, Bola's going to get wrecked to the dumpster, or I don't know. They want certainty. And the problem with certainty, the thing is, I could do so many posts where I'm like, the bottom is in, bear trap, long here, or regret it for life. And I'd be right a lot. The thing is, that's just not the perspective you should ever have when entering a position or analyzing the market. There's a support idea here. You're getting a reaction. You have no control over what will happen. A bounce might be probable, and you might be trading it, but people want you to tell them what will happen. But the problem is no one does, and I could be right 70% of the time. And then when you're wrong, people will say, but you said, price would go down. And it's like you're kind of trading some of that. For me, it's integrity in how you're presenting your ideas for just more people wanting to follow you. Where it's like, but it's just not, in my opinion, a good way to present ideas with that level of certainty. I could be very confident in an idea, but I'm just still going to say important resistance, invalidation here. I'm entering a short. There's still targets that could come higher. These are my targets to the downside, whatever it is. And so I think that is it. People, because there's a lot of perma bear accounts too that get good engagement, or maybe they're not even perma bear. They're just really bearish, and they're saying what price will go to with a certainty. Like if I just said, let's just say my primary thesis right now is that we are going to at some point come into these lows, sweep them, not take this low, and then have a massive rally. I have a lot of ideas that would work, so I could just be spamming that all the time. You think the bottom's in, you fool. We're going to go here, 18K, whatever, and just over and over and over again. And if it happens, then, I get people hooping and hollering. And if it doesn't, then I could just say, well, whatever, not every idea works. But why present the idea with so much certainty? There's no point. But I think it's sort of like, it's fine as long as you have invalidation in your ideas. It's sort of a personality thing too. But yeah. Somebody was asking about Prophet Blue. Yeah, I think Prophet Blue is someone who, me and him have talked about that in DMs too, where, he has more of that kind of like bold call style, but he also posts invalidation and stuff like that. So I think it's fine. But he gave me one of my first shout outs when I had almost no followers, and always has been great. I think I had like 3,000 or 4,000 followers come from a Prophet Blue shout out. And so a lot of people would always ask me like, well, what, Prophet Blue is saying the opposite of what you're saying or whatever. It's like, I don't really, someone's asking, Heath says it's going to dump to 10K. It very well may. I'm not saying that price can't dump to 10K. My style would just be more, we have lots of support ideas here. If they get lost, I'll start looking towards lower targets. It's kind of hard for me to justify calling that price is going to go to 10K when we have this happening.
and I have no reason to make that call. I think stuff like that is fun. Like I kind of had that with this Gartley harmonic that I kept sharing, long or short, long, and it like played out perfectly. And it looks like you're just calling exactly what will happen, and in some ways you are, but like people were saying, oh, don't be so confident, we're breaking out, your confidence is going to get you wrecked, whatever. And I was saying, I'm still just trading this like a normal idea. It's not going to get me wrecked. If it doesn't work, I'll just get stopped out and it's fine. I'm going to short this. It's an idea I have. And people think that trading is about guessing or calling where the market will go. It's not. You have no idea. It's just coming up with technical ideas, trading them with risk management. If they get invalidated, they get invalidated. Yeah, I agree. 10K is a little ambitious for me right now. What would I like to see? I'd like to see one more test of the range lows. And maybe we come up into this golden pocket when it intersects with these two trend lines. Why is that not the golden pocket anymore? Oh, wait, no, it's just this trend line that it would interact with. For some reason, I thought there was an intersection. Maybe we come down, we sweep these lows. What would this be? 2 weeks, 3 weeks from now? Maybe we get a little rejection here, but I would like to see price come off these range lows into like this 37K region at least. I think this would absolutely wreck a ton of people expecting a big breakdown here. Everyone's talking about 14K, 10K, 5K, 6K. As price comes down, sweeps these lows, tons of longs will be stopped out, shorts, and then we have that sharp reversal. Nobody believes it's going to happen. They're shorting every rally all the way up into a massive retracement. And then from there, I'm open to 10K. But I'd like to see this range play out first, maybe a bigger retracement and just wreck a ton of shorts, FOMO longs, and then see a deeper retracement. That's sort of what I'm looking towards. Yeah, there's sort of people are saying 10K is too easy an idea to trade, or someone said something like that. I think there's some truth to that. Like if price just dropped to 10K, it'd probably be likely it just goes lower. But it's also hard to actually really predict how people will react. Even at 10K would seem like such a great buy now. I think it would be pretty scary still. But I think what would wreck more people is if we pumped up to 38K and then it came down to 10K and then 10K. I mean, it would just change the entire narrative of this quote unquote bear market, and realizing that this price action, here's some, I think it's alpha, maybe it's not. Here's some interesting insight. How have these quote unquote bear markets played out before? Well, we have this huge rundown into the 786 region. It's kind of between that and the golden pocket. Depends where you pull it from. I think this pivot low does make sense. We didn't quite hit the 786. But then we have a 382. Oh, it almost is exactly the 786, which just pointing out that is exactly what this is, right? And we have a 382 retracement, which is what? 100% pump, but still a pretty bearish retracement. And then the market continues deeper. And that actually happens quite often. And it doesn't mean the bear market's over. This was actually a 50% retracement. I think this was actually a 382 retracement first. But these are pretty sizable pumps into a continuation. And so the only point I would make is people would think bear market over if we have a 100% pump into the 382 off the 786, but that's actually exactly what happened here. A 786, a 382 pump, which was 100%, and the bear market, quote unquote, continued. So is it that unreasonable to think that we might get something like that? I don't think so. But that's just my 2 cents. Poseidon saying, don't tell me that 3K low will be sweet, please. Whew, it'd be a tall order. It would be a tall order. It's possible, but I think a lot of the leverage would be completely wiped out of the market well before 3K. There are important log scale ideas at 17K. Retest these levels, 12K might make sense. It's just really hard, you know, to justify like 100% retracement of this pivot low, of this impulse low. But we'll see. Very well could happen. But to me, there's no point in really worrying about it, because right now we have a rejection from this ascending channel. I mean, the thing is, I know most people don't want to trade every day, but whether you're trading on a higher time frame ideas or lower time frame ideas, you can find your shorts and your longs like not relatively easily, I shouldn't say, but there's not really a reason to just hold out for 10K when you have clear support ideas that you can just put a long on, take some profits, put your stop to entry. If we come down, okay, look for lower. If not, then you're in a long and carry it through. Someone's saying, Lucky, give me a favor, please, and divide BTC through M2 money supply. Yeah, I've seen that chart actually. I think it's interesting. I've seen a chart on it. I thought it was very cool analysis. Can we just dump? Nope. So ape coming up to test this point of control. Probably, we'll just see. As we get closer and closer to the daily open, yeah. As we get closer and closer to the daily open, we have to look for the potential of another pivot. I think one thing I would say is that, like, if, say, you know, I talked about that kind of important time around here, this 4-hour candle, which we did kind of put in a pivot high and then rejection. If that doesn't carry through and you're still consolidating at resistance as you push into the daily open candle, it's reasonable to expect that you're going to get a retest of the highs in the daily open, or even a sweep of the highs. If you're at resistance at the daily open and you're consolidating and you haven't put in a nice rejection, just something that is more likely. But yeah, if you've not been here for a while, essentially I was just pointing out up here as Bitcoin came retesting resistance, we had bearish absorption, probably a rejection likely. The only trades that really make sense up here are shorts or no trades. We never long this. I have a short on ape from up here. I shorted vet. I took profits on ape and vet as we swept these lows and reclaimed them. I just took profit, stopped to entry, and just waiting to see price action play out. I was maybe going to do more scalping, but it's just hard to justify any scalped longs
at such high time frame resistance. And earlier I've gone over these ideas that they're all very similar. You have this sweep of this high on ape, this ascending trend line, major golden pocket. We have a damn near identical setup on Matic. Wait, not Matic, Atom, right? What coin was it? Oh, Sushi. I've gotten a lot of requests today. Damn it, that's a different profile. All right. Oh, Sushi is actually, I didn't set any alerts. It's actually pumping back up to the highs and this trend line. So Sushi is in a descending channel type idea, an ascending channel locally. This golden pocket, sweep of the highs, very similar price action to ape, but we are retesting this channel. I don't know if I want to open any more shorts because I have so many shorts right now. It's a local 786, and I've talked about this earlier as well. Also, it's the 50% fib. So you have a golden pocket from here, 50% fib from here. So if you pulled this as a horizontal range, you could just kind of say like you're testing the middle of the range with some other confluence. Now we have a local 786, which I don't know if I said this on Sushi, but I pointed out earlier, you're kind of looking for a rejection and altcoins like that 786 retracement and retest of the level they swing failured, which was also what ape essentially did, I think. Even I'm getting confused. I have too much analysis going on. Came through the 786, but perfect retest of the swing failure. But you're usually looking, it's very common to have that initial swing failure, rejection, 786 / retest that can make a nice entry. So Sushi, is this an entry that makes sense on a low time frame but based on high time frame ideas with good risk reward? Probably. You have this descending channel as confluence, local 786. You could probably justify a short position with, holy, I didn't even realize how close this is. I may have to short this. I mean, I could run a stop 1% away and have it that far out of the channel. I didn't even realize how close this was. I may actually open a small short here. The reason I don't like to open a ton of shorts at the same time is, I've explained this earlier as well, is if we do get a pump here, it's likely that I'm going to get stopped out of my vet short, my ape short, in this case a Sushi short, but I do have to short this. I'm going to go to my other computer. I'm just going to do it with a small size. I'm just got to keep my risk intact, my risk management intact. I personally think it's reasonable All right. So, yeah, this is just like one of those things where I would short this. I mean, it's just too good, right? And it's, you know, I didn't realize, I hadn't really pulled the percentage here. I didn't realize how tight this was. I would have just assumed this was like 1 or 2% away. But with the invalidation this tight, even being able to run a 1% stop and it be well outside of both of these ideas, it's just, like I said, too good not to short. it's such a standard idea here with so much confluence. So, anyways, and the thing about this short is it's a high time frame idea, right? So imagine this, right? If you wanted to just short this as a technical swing failure, you could technically put your stop. I'm running mine a little wider. You could technically put your stop into the 0.3, 0.4% region. So your risk reward, if you want to trade this as a descending channel, and with the ideas of, I mean, I can put the idea together here pretty quick. You have a 30 to 1 risk reward just trading this local swing or descending channel. You have a 74 to 1 if you come into the range lows. I don't know. Looks kind of nice to me. Hey, good night, Poseidon. Thanks for tuning in, and hey, thanks for sharing my live stream. That was awesome of you. I saw I have some messages from you. I'll catch up on those when I take a little break here, but I really appreciate your friendship. And get well. I know you're not feeling well. That sucks. USA. So now that I am short on sushi, I am much more interested in putting together some ideas here. And I'm kind of interested in getting rid of these backgrounds that are kind of hard to look at. I guess without a background, it's sort of more confusing. But anyways, let me just look at this for a second. I actually can't even put, I need these to be different colors to figure out what's going on, and I need the center lines to be different colors. I mean, this would just probably be the most logical target. Like, you take profits likely. Maybe we look to add. But the most logical target would probably be here, right? You have a ascending channel idea that is relatively clean, and you'd come into the lows, into this golden pocket, and then you have a descending channel idea. This would be the middle, into this golden pocket from this pivot. So this trade probably looks something like this. Let's just run it as a 1% stop-ish. Got like a 20 to 1 risk reward. Always using risk management because you could clearly just get stopped out here. Sorry, just looking at a text. The only thing I don't like about this short just so grindy up into here. The impulse doesn't look that suspect, but I don't know. Volume's okay. We'll see. It's just really just a technical rejection here. That be silly kind of not to take a position, I think. Powerful ideas with these ascending channels, I think. Just gonna throw them together. Vet still holding bearish local structure.
8, kind of rejecting from this pivot golden pocket. We have the point of control here locally. I mean, these are all swing positions for me, more or less. I'll take, I like the quick take profit 1, but leave 70% running to deeper targets. But as you can see, sometimes, a little bit of work goes into these positions. But I can put together ideas pretty quick. I really prefer shorting these types of setups rather than even on Bitcoin. Like, this was fine, but I think the risk reward of shorting some of these alts at these major highs is probably a little better than these scalps on Bitcoin. Well, yeah, if someone's saying Bitcoin short target, short term and long term. I said I didn't short this on Bitcoin, but I did say at the beginning of the stream that this is a perfectly reasonable short here, even with the stop above this high. And so if you're in that trade, obviously do whatever you want with it. If I was in it, I would actually be taking profit here. I think a TP1 locally makes perfect sense. And then, you could justify taking profit at the lows of this range, but I think if we come down, it's probably likely we just sweep these lows into this channel. So this would definitely be a take profit too. But yeah, I mean, if we start losing this, oops, let me draw this out a little bit better and delete these confusing lines. I think you'd be looking to take profit here. You got the VWAP retesting the middle of the channel. There's no really confirmation that this is going to be a major rejection. I think be happy to get out of a short with some profit. If we start losing this and we start coming to these range lows and this key low, I think it's more likely that we're heading down to the middle to this channel. I'd even be considering longs here. I'd certainly be taking profits off shorts. If you're wanting to be a lot safer, there's always a chance that a swing failure here could cause a reaction, and you might either want, if you're at the chart, take profits manually, or just take profits right before this swing failure, because it could generate a move that front runs this. So, profit taking can be a little finicky sometimes. Same with entries. You can have nice levels that get front run. But no matter what, I would say that your profit targets on a short should always be above support, right? You don't want to set your profit targets under the level that you'd bounce from. You wouldn't put your profit targets under this ascending channel. You put it above, because this is the place you would bounce from, and you won't get a profit target or profit hit if we bounce from it. Somebody's saying, do I see a parallel channel idea on OP to short the top of the pump? It has a nice interaction with the middle of the channel so far. I mean, I really don't want to even look at more shorts. I have so many shorts going now. I also have some longs going. I'm not familiar with OP. Can look at it quick. Is OP a brand new coin? Or is it just brand new to Binance? Sometimes I don't like trading coins that are brand new, because you just don't have the price history. I mean, if this is where it opened and it's brand new and it launched this month, then we're just testing the all-time high, I suppose. But the problem is you just don't have any context for the price discovery that could happen. I don't know anything about this coin. I mean, you could certainly just take a stab at a short at kind of all-time highs here as a double top, but it's just hard to analyze this, right? Because there's nothing, you can't pull fibs for resistance. It's very hard to do analysis on a brand new coin if you have no price history. And if you do, it just all has to be local, right? You have to find local ideas. But yeah, all that being said, there's almost zero chance I'd personally short this, just because there's setups where I can have way more confluence with more price history for analysis. I think for those tuning in new to this stream, I think watching this from the beginning would be really good. Had some pretty good ideas for local analysis and pretty much read things more or less perfectly. I wouldn't say perfect maybe, but had a pretty good read here. Took this short on sushi. It'd be nice if the bottom could drop out. But I hope this just shows as a great example of the types of things I look for. And I think for the kind of common wisdom, most people would say, you remove this analysis. It looks kind of clear enough if you understand these concepts. I've been following what I do for a while. But you remove the analysis, and someone would say, who would short this? I mean, you're just shorting a pump, a relentless pump, and especially if you're shorting at the top of this wick. But you put it on the analysis, and it's like, hey, this looks quite nice. That's how you end up with a short from the top, and it's not like you're just randomly shorting every rally. There's so many technical ideas there. And it might not be the top. I mean, we can just blow through this level. But anyways, that's how I like to trade. All right, bear with me. I'm going to go see if the coffee's still warm and maybe do one more cup. I'll be right back. But yeah, the worst case scenario today would have been I just was completely wrong about everything. I don't look at it as being right or wrong because I'm right that this is important resistance. I have no idea if we're going to break it or not. But I already know, even if we break it, I know it's important. But resistance can break. But yeah, it would have been funny if just everything I said was completely wrong. Then you're just sitting here for hours looking like an idiot. Which was always a possibility. Yeah, I guess in some ways, nice to see Vet still reacting. In some ways, this is just sort of turning into a live stream where we're just looking at swing shorts. I mean, it's not really 1 minute chart analysis. I mean, certainly you could do it. This is sort of a 1 minute descending channel. But I really I wouldn't be interested in anything but shorts on anything here. And really a lot of stuff is at kind of swing short levels, so all the better. Just looking at some texts. If you're interested in becoming a member, I don't know if the link's in the description. I forget how live streams work. But the link is in my Twitter bio, luckyapestradingfloor.com. And I do forms of this type of live analysis every day, and I teach these concepts if this style of analysis appeals to you. We have a great community. We have hundreds of members. You know, people hang out, share analysis in the Discord. We have some members that have been there for 6-7 months who share great analysis, actually. AC Dix, who's a member, is saying, would you recommend closing vet then if we are still in it? I actually don't know what you mean. Like, are you in a long or? I'm in a short on vet. I'm not closing it because it's kind of a swing short for me. I mean, it seems, a pretty standard thing to happen, even when you have these big impulses, like on all time frames, is for this whole impulse to be retraced and these lows to be swept. And even if that happens before a rally, that'd be kind of a potential profit target too. Sweep these lows, come back into the 618, the middle of this channel, and if you get another impulse up, probably likely something like that happens first. Yeah, so I think you're talking about the initial short I took on vet, which was up here. I took profits on this pullback, which ended up being like not a big winning trade, stopped entry, and while I was sleeping, I got stopped out at entry for a slight winner, and I've re-entered here. Someone's saying it's midnight here in Europe. What time are you going to finish live stream? I don't know. Part of me just wants to finish it soon. Like if we just have a nice breakdown here, got nice shorts. I mean, these are swing shorts. Price is probably over the next couple hours. If we break down, everything's going to look more like this maybe, or maybe we just break down into the daily open. I don't know if there's really any reason to keep the live stream open. We've covered a ton. I mean, I think it's been really good. So almost 5 hours. Wow. Yeah. So I might wrap it up pretty quick. Let me go to, somebody asked for Soul. We can take a look at it. I think it was the second most requested idea. Gotta say though, this was kind of a sweet short on sushi, right? Right here. Sometimes you just see something and you're like, I gotta short that. Even though I wasn't planning on shorting any more altcoins. We gotta watch locally. I think I wouldn't be too eager to take profits too quickly here but there are some local support ideas here. It'd be nice just to lose them, honestly, instead of this. But I mean, this is such a good high time frame idea. It'd be kind of fine just to let this run, even if we come retest the highs. If I get stopped out, is it that big of a deal? Not really. I've taken profits on all my other shorts, but might be not the worst idea. But okay, I'll look at Soul. Just being aware that we have this idea here. – It's just such a small reaction here so far off a high time frame level. Yeah, I mean it probably is smart just to take profits, but the thing is you have this structure being broken. You could maybe wait and see if it gets reclaimed. You're going to give up 0.8% or something, 0.6. Okay, let me go to Sol really quick. I always feel stupid when I scroll through this list because I forget it's alphabetical. I'm just looking and I realize. Actually, I think I want to use. Where is this other folder I have? Oh, whatever. I had some more Sol analysis. Let's look here. All right. So let's go over Sol. Oops. So Sol is interesting here. Let me just make sure that I have all these levels pulled properly. Obviously, Sol rejecting off a golden pocket. You'll find that to be a common theme. Bounced off the value area high last night. I was watching that actually. I mean, I wouldn't personally be opening any trades here on Sol. I think shorting this golden pocket might have made much sense. And some of us might have shorts still running from it. Because that was a short that I took. Now, let me just see. I mean, I think front running this golden pocket is interesting because now we have a key level below us with a point of control. Let's see if it's still a point of control. Nope. Well, an old point of control, which isn't really well defined, obviously, inside this golden pocket, and we would sweep these lows. So, like, if I was interested in a long on Sol, which would probably be the only thing I'd be waiting for right now, I'd be looking for this low to be swept and add an alert here. This might offer a nice scalp long. And what you would do for some form of confirmation, typically if you want to trade this as a technical swing failure setup, you could wait for this level to be tapped, wait for this level to be reclaimed, and then you enter with your stop under the new low, wherever it was, on the reclaim of this level. That'd be a technical way to trade that off a reaction. Whew. Okay, reading some comments here. I mean, there's obviously short ideas too, up higher. But, you know, this was a nice short on Sol because this was a long time ago, the 19th of July. We had the golden pocket. We had this kind of trend line idea. And actually, when price was around here, I just pointed out, hey, we have this trend line idea of the golden pocket. I'll probably be shorting this. I did short that. The retest, interesting. But right now, with this kind of this rejection here, I'd just be looking for lower. Wouldn't really want to trade anything here. Set my alerts, and if I get a nice setup, I'll probably take it. Come revisit the charts when it comes. That's one thing I'd recommend. Like, so some of my trades, I don't, I forget that I even charted these, and I might have charted them like 3 or 4 weeks before, and I have an alert set. I'm like, oh, an alert's going off, and I open the chart, and I'm like, oh, nice. And I have all my analysis, and then I decide if I want to take a trade. And so usually what my days are spent doing is charting, looking for good setups. Even this vet idea, I didn't even remember charting it. Yeah, looking for good setups, setting alerts, and just waiting. You know, you have some alerts on Bitcoin, Ethereum, altcoins, and just waiting for really nice ideas. And not just opening my charts expecting to trade the moment I do. Um, I really appreciate a lot of these positive comments. Obviously, it's nice to hear nice things. Somebody said, "Can I do this once a week?" That might be a tall order. I'll probably do something like this again in the future. Um, I used to do more in the members group where I would do. I mean, it did become a bit of a challenge where I would do every day, like a 2 hour New York Open live stream. But I did kind of feel like there's almost diminishing returns doing that every single day, especially when nothing particular is happening with price action. Like you're not necessarily hitting a key level every single New York Open. So I'll probably try to stay on like a 3 day a week schedule would probably make sense, but it would be more when the key levels are being hit. I think makes sense just to fire up a live stream. But yeah, I'll try to do more stuff like this in the future. Yeah, someone's saying, bro, I've been on and off watching your stream for the last 4 hours, 4.5 hours. Just want to say you're an absolute legend for this because WTF, keep it up, man. Thank you. Yeah, I mean, it's always feels good to be on the right side of price action for the day. I'm not trying to be overly humble. I'm not trying to be arrogant. I typically have a very good read on the market. I think I do really well. Sometimes I'm wrong. I would say it like this. Sometimes support breaks and resistance breaks. I have no control over that. But typically, what I think is important to realize, this is how you know resistance or support is important. Just go here. I'm just going to do a really clean example. If I say this is important resistance, and price is going like this and this, and it's been parabolic up to there, and now we're just consolidating. I've identified this well beforehand. Clearly, it's important. It's halting price. Now, if I short it and this happens, great. I shorted important resistance. If I short it with a stop loss and this happens, it was still important resistance. How do I know? Because price consolidated under it, and as soon as that resistance gave out, price blasted further up towards the next level. And in which case, I'm just out of this trade. I've limited my risk to essentially this because I've done such a quote-unquote good job of identifying important resistance, and I'm out of a short, and I can look to higher, and I can carry my longs further. So important resistance doesn't mean price has to reject from there. It's just saying this is important. Price may reject from here. I think it's a reasonable short. If we break through it, it's reasonable to expect higher because we're breaking important resistance. So anyways. One of the reasons I think that I need to end the stream soon is because I'll have a thought, maybe I'll read a comment, I'll go on a tangent, and I'll forget what I was doing right before that. I think we're just sitting in shorts, right? Waiting for breakdowns. Yeah. Well, so now, it's nice. The live streams ended with a short on sushi. Nice setup there. A short on ape. Although I took this a little before the live stream. Although I think we're talking about it in this region. As a short I took. And a short on vet. And I didn't take it, but pointing out a reasonable short here and pointing out a reasonable short on Ethereum, which I will pop over and take a look at Ethereum really quick before I consider wrapping up. But also was pointing out that this was probably a reasonable place to expect a rejection on Ethereum. Oh yeah, we did the whole Elliott wave count thing. I think it's been a successful stream. Another thing, people ask, someone asks what my days are like. Well, there is an ascending trend line. I can just eyeball it. So for me, I don't know if you guys can see that. I can see this, and I can see that trend line before I draw it. I can tell that is essentially there's not really a parallel channel idea there, but I can tell that this is an ascending trend line. You need to really watch trend lines on Ethereum because they are, I think Ethereum holds trend lines better than almost any other altcoin. I don't know why, but I've noticed that. Much better than Bitcoin. I would say that you could actually trade Ethereum, at least the majority of the last couple of years, off trend lines alone. It's so good. Um, but anyways, yeah, pointing out resistance. I think we had a pretty good read on what was going down today. So, less interested in trading things like this, where do I really want to short Sol here when I can short Sushi at major resistance or short Vet at major resistance? It's not to say we can't pump, but just the risk reward's a little better. The invalidation's also a little clearer to me. I know this sounds kind of crazy, like this Gala short. I know I have a lot of mess here. These shorts at the tops and bottoms are actually, I find them easier trades to take than some of this stuff with these like wicks, because it's just no one's trading these, counter trading these moves most of the time. It's like the XRP short I have from the top two. I just find it easier. I don't know why. It doesn't scare me to enter the trade. I have no problem cutting it if the idea doesn't work. So I like trading tops and bottoms, not because of like the bragging rights or anything. I actually just find them easier. Just reading through some comments. Nice. Yeah, someone's saying that they joined my group. They were in another group before. It didn't really work, or they followed someone else. And they like that one thing I stress over and over is risk management, that they didn't understand well before, and I explained it well. Yeah, it's actually is the most important thing in trading. People think it's about having good technical analysis and all that stuff, but it really is just risk management. If you can't figure out how to manage your risk and do it consistently, you're never going to be a profitable trader. It's just the way it is. Because if you don't manage your risk on the extreme end, it could take one trade going against you with no risk management to wipe out your entire account. And if it's kind of like if you're playing Russian roulette and you have 6 empty rounds or 5 empty rounds and one with a bullet in it. Yeah, you might get away with spinning that thing a few times. But if you're not using risk management, even if you have a high win rate, it just takes one time and there's a bullet in the chamber. And I think that's how people trade. Is they think a high win rate means they won't lose. It just means, you might get a few extra spins before it's game over. Somebody said, interesting. Somebody said, look at Bitcoin. It's going to pump. Please help look at Bitcoin. It looks pumping to 24K. 24K is a big target. There is an important fib retracement there. I would say if we go to 24, more likely to take this high up into like the 24.2 region. But right now we are having a major rejection from important resistance here, which I pointed out this morning. Local golden pocket. We have this ascending channel idea. But yeah. Okay, guys. I hope everyone's okay with me ending the stream. I think it has been great. I've enjoyed it. It hasn't been too exhausting or anything, but we got these just nice, great positions. I shouldn't say we, because that implies that you should be trading them. I would say do not trade ideas you don't understand. But what this live stream hopefully did was give you guys a really good foundation for how these ideas work and why I trade them the way I do. And, where you can kind of recreate some of this stuff on your chart. Thanks, everyone. Okay. And I would recommend looking towards the new daily open. if we're at key support, you know, you might want to consider taking some profits off positions if we're getting a bounce in the daily open. So that's another important time. But I like to take partial profits and leave some running, let the trades play out. Appreciate you guys. Somebody's saying 30 more minutes. I just don't know if there's a point. I mean, I think from here it's a pretty clear play. You're in a really nice position if you're in shorts. I mean, I'm not really planning on opening. I'm not going to open any longs after this rejection. I would maybe add to my shorts if I got a major retracement, but unless I get a major one, I'm not going to. These should all have profits locked in them, whether you locked in profits lower here. If you get some signs of strength, take some profits, and just let the trades play out. Is there really anything else to do here? You know, everything that I am short on is dumping, which is always nice. And yeah, I think it's great. Hey, I'll ask for a quick favor from everybody here. I'm going to post the link to this live stream in a little bit on Twitter. If you could leave a comment on that post saying if you think people should come back and watch the recording, and what the value you got out of it was, or something like that. Because I think a lot of people don't want to watch something that's old because they think it's pointless. But I mean, I go over a lot of levels to the downside in this, but it's that I think that this type of thing gives so much value in terms of educational content. It's easily something someone should watch in hindsight. They don't need to watch it live. And if you could kind of help people, if you have that opinion as well, I guess if you think it sucked, you can leave that comment too. But yeah, it's just always helpful for people to see the value that someone else got out of it. Because of course I'm going to say, you should watch this. But, you know, people trust other people's opinion